Hey, what's up, everybody? You guys hear me okay?
Sorry, sir.
We can hear
Awesome. How you guys doing?
you.
Good,
Great.
man.
All right, just give me 1 second. I'm just going to set this all. Are you guys able to annotate by any chance?
I have no idea.
Can somebody try? Oh, you can do it? Okay, great. Okay, cool. So hopefully you guys can hear me okay. Hope everybody's off to a good start on their weekend. Had a good week and everything. So what we're going to be doing today, guys, is just we're going to be doing back testing, obviously, but we're going to do a little bit of like hindsight as well. So the idea here isn't, to try and ace it or whatever. The way that I typically back test, I don't always try to just do this hardcore back testing where I do replay and try to catch everything. A lot of the time I like to rewind and see what mistakes I made, see what trades ended up working. That way I can learn from it, right? So what I want to do today as well is give you guys the opportunity to sort of pick out zones you think are going to work. And then you can kind of rewind and see, if it did work or not. We'll play it forward and we'll also experiment a little bit with trade management. So I know like, good chunk of you guys are probably playing with, 5R trades, that kind of thing. Or you're doing a little bit of like management in terms of like taking partials. But we can kind of experiment with all of it. I kind of wanted to go with the 5R route to just show you guys how like profitable it can be. And we'll even leave in like some of our losses in there so you get an idea of like a realistic session, right? What we'll probably do is anywhere from like 2 to 4 weeks. We're just doing January 4th on EU of this year. It's been a while since I've traded this particular price action, so I don't know what really happens, but yeah, I guess let's get started. If you guys do annotate, the only thing that I'm going to request is, we don't like draw anything inappropriate, anything like that. Try to keep it professional. If you are going to use the annotate tool, use this little box that I have here. So if you go up to like where it says draw, there's like a bunch of boxes. There's a box with an outline. That's kind of the cleanest one. That way we're not like drawing with like, our pencils and stuff and it gets all messy. It'll just help me with like identifying what you guys actually want to pick. And then we can kind of move from there.
Hey, man, I got a question.
Yeah, of course. What's up?
You mostly backtest on soft effects, or is TradingView like all right to backtest on as well? Or?
So I do a mix. I would say, yeah, primarily I do like this type of backtesting on software effects. But then when it comes to case studies and like the stuff I post in T markups, that's obviously all in TradingView. I don't really do much bar replay other than to like cut price to a specific area if I want to study it. Make sense?
Yeah.
Awesome. All right, I'm gonna get started. I want to see if I can pull this chat up though too, in case you guys have questions. Okay, cool. I think if anybody has problems with audio, just try rejoining, and that should fix it. But I guess let's start off with our higher time frame analysis. You guys are welcome to sort of jump in if you have questions, if you have comments, go for it. Usually what I do is I'll start off with the daily or weekly. Because we're on software FX, it's kind of like difficult to do it, so I'm gonna just stick to the 4 hour as much as I can. But obviously we don't have that much historical data to work off of either for like shorts, so we'll just play it kind of playing like intraday, because I know most of you guys do that anyways. We'll do intraday scalps, we'll do a little bit of S to D stuff, but for the most part what I want to focus on is the like liquidity sweeps and stuff, just so you guys get an idea of it and so you can learn something from this. So first thing I'm going to mark out here is we see that we're developing a reaction on the 4 hour. We've broken structure up, right? But to me, the fact that we broke structure or not on the 4 hour like isn't all that important. I just like the fact that we've started to build a reaction off of this zone here, right? So I'm going to clone that. In terms of 15-minute structure, it looks like overall we're in like a complex pullback. I mean, we are bearish, but because again we're reacting off of this 4 hour, I'm going to be a little bit aggressive and I'm willing to take substructure breaks for the 15-minute on the upside. So let's play price forward a little bit and kind of see what happens. I'll slow this down a little bit. Also, I'm going to be risking 0.5%. I don't know if I mentioned that earlier, but that's what I like to trade with in like a live market. And there's our 15-minute break of structure here. Sub boss, right? Yeah, I like trading with 0.5% because it gives us better account durability. I can kind of afford to take a string of like more losses, right? And see we're starting to build a bit of liquidity on the downside here, thinking we're pretty bullish. The other thing that I pay a lot of attention to that, you know, I know a lot of you guys like to trade London. We'll trade both London and New York. I won't be trading Asia at all for this, but I like, you know, like London kill zones. So that's usually my time. It's like 2 a.m. to 3 a.m. to 4 a.m. So there's like a bit of like a 2 to 3 hour gap there that I like to trade. For those of you in London, I think this is a little bit off, but you know, London Open is obviously at 8. 7 is kind of the start of kill zone, and then from 9 to 10 is also kind of part of it. But then anything after 10, this 3 hour gap or like 2 hour gap before New York, I don't like trading that either. So I find price consolidates a lot.
Hey
So
man,
there's not as many opportunities. There's less volatility, right? So I'm just going to mark out my liquidity a little bit more here. We'll mark out some potential zones where we think, you know, might be bullish. I mean, what do you guys think? Mark out some zones that you think are going to produce a reaction, and we'll see if it works or not.
Hey man, I got a quick question.
Sure. What's up?
When you take a loss at 0.5 risk, do you drop your risk down to 0.25, or you're done for the day, or like what do you do?
No, so I do have like max like daily loss rules. Usually it's like it really depends. Like for me, when I start getting like my emotions involved and stuff, that's when I like cut myself off, number one. So that's kind of one filter. Number two, yeah, if I take like 2 or 3 back-to-back losses, then yeah, I'm gonna call it for the day. But I'm okay with taking losses. No, I'm not gonna give you remote control of my screen right now. Yeah, but in terms of you know, if I've taken some wins and you know that's working out for me, then I'm okay with taking some losses in between, because overall I'll be like net positive for the day, right?
Okay.
So yeah, hopefully that answers your question. Yeah, this zone definitely could produce a reaction. So we'll mark it out too. But again, for me, like I'm looking at 15-minute substructure, and remember we're coming off of a 4-hour bullish zone here, right guys? So I'm kind of trading like, yeah, and on top of that, you also have this zone up here, which like might produce a reaction. Again, I don't know. I don't remember this price action that well, but well, again, we'll mark that all out too. I think these are decent zones to play off of. Yeah, there's definitely liquidity there. It's a good point. Okay, looks like we're going to start reacting to this a little bit. I'm going to set an order here, just mark it. I think it's going to play off of this. Let's see. Give it 3 pips stop loss. And again, I'm going to do 5R like hard TP. We can do a little bit of experimentation, but like for the most part, again, we'll do this 5R stuff. And if you guys want at the end, we can also do a little bit of like taking partial profits on certain trades too. That's working out pretty well. Again, why am I taking along? You guys are probably wondering. I'm timing this with London Open too, right? Well, actually the fact that we're in kill zone altogether. So anytime I see this and like I see like liquidity build, a zone, this is also an STP flip zone, I believe, because this is reacting off of this here. You know, this is on the 1 minute, obviously, but it's a little bit harder to see on like the 5 and 15. I'm pretty much just taking a continuation, right? Because the other way that you can kind of look at this is on the 5 minute. This is liquidity for sure, like potentially for later, but you see how we built liquidity here, and we kind of have that model that we all look for. Let's see if I can clone that. So let me pull up like my annotation tool too, so I can kind of explain this to you guys while I let this play. Where's my drawing tool? So anytime I see kind of something like this where we have like a last bearish push, let me get a different color because I can't even see this. Okay. Is my thing? It's showing as yellow for you guys too, right? I don't think I can change it. Oh, there we go. Okay. So anytime I see some sort of liquidity like this build, whether it's on the 5 or 15, I'm always going to be looking at zones for like this, right? So this potentially could be a trade that we could take, but this all happened pretty much in Asia, right? So I'd probably stay out of it. The thing is, I am kind of following the mitigations as well, right? So when I see liquidity, I see like a sweep like this, and then I see a series of mitigations where we keep on like, we broke structure here, we pushed up. We didn't really build liquidity here. Maybe we did on a lower time frame, but then we came and tapped into this and this pushed up. That tells me that price is like pretty like bullish from an intraday perspective. So as a scalper, we can try to capitalize on a move like that. So let's play on.
Hi, I've got one question.
Sure, what's up?
So when it broke the 15-minute structure, the bullish structure, and then
Yeah.
we had this 15-minute bearish zone, would you not expect a pullback? So can you not expect a pullback to trade the shorts into the buy?
So we can, and that's definitely something that we can observe. But again, we're coming off of a 4-hour bullish zone. So I'm looking for continuations long from there, right? Because the minute that I see like 5-minute breaker structure like happen after we tap into a 4-hour zone, which we got like, I mean, pretty much in Asia, right? We started breaking 5-minute structure up. We started doing like these mitigations, continuations, pushes up. That's when I start looking for longs. That being said, I wouldn't be opposed to taking this as a hedge if this had broken like clearer structure to the downside on a time frame like the 5-minute, right? So in this case, like, yeah, we broke substructure, but where's our liquidity here? I don't really see anything, do you? You know what I mean? So it's definitely like a good learning point. The thing is, we don't want to overtrade either. So you're going to see a ton of opportunities. Honestly, the biggest part about trading this way, and then especially adding S to D flips, is adding filters. So if you don't filter out your trades and you take everything, like there's a good chance you're going to hit like a losing streak. And it's going to affect your ability to trade proper setups, like from a psychological standpoint. So it's something to keep in mind too. But if, for example, we reacted off of this, even if we wicked it like this on the 15-minute, and say that we did kind of something like this where we started breaking even 15-minute or 5-minute structure down, right? Kind of like that. We start building liquidity. We tap into this, break, and then we build a little bit of liquidity again and kind of tap into that. I would definitely put an order on something like that. And I'd be happy to take a loss on an entry like this. Does that make sense?
Yep, thank you.
Can I ask a question?
Yeah, of course. You guys don't have to ask. If you can ask a question, just fire away and I'll try to answer them as much as I can while I do.
No worries. I noticed your entry there was with a 1-minute bearish, so a risk entry. Could you not have entered? You see where a 1-minute breaks, there's a little demand zone just up a bit.
This one,
see
this
that?
one.
No, the wick. Yeah, so the wick just before that broke the structure. I'm not let me annotate a second.
Do you mind annotating it? Do you mean this one?
Yeah, that one. That's it.
Yeah, this one's actually another like S to D zone. So here's the thing. Again, if you're being aggressive about it, we'll rewind because that's actually a pretty good point. When we see stuff like that, I typically look for this in session too. It's a little bit harder because like obviously you can't rewind time, and you're waiting probably like 100 times this is 100 times the speed too, right? So in terms of like S to D zones, this would definitely be one, right? Because we have our supply here, we push up into it, we push down, and then we break structure above it. So that's a good zone to take. The thing is, for me, I'm still experimenting with it personally, but I usually like to see some sort of liquidity build. The thing is, as well, like obviously we built liquidity here, we swept into this, we continued up, we hit 5R a little bit later, right? When I see that we have like a proper setup that kind of works, and we're hitching our ride to London's momentum, then you can start looking for those like a little bit more aggressive entries. Thing is, there is a certain point where like I'm going to stop trying to take longs because the move can get exhausted as well, right? So something to be careful of. We'll set an order on this though too. Let's see if this hits our 5R mark too. And we'll just do like a limit on this one. Let me pull it back a little bit. That's a very good catch. Anytime you guys see something like that I even miss, like call it out, and we'll take it. And we'll also try to take losses too, because I really want to demonstrate to you guys you can take losses and like still be pretty profitable with it. You can be very profitable with it. But do you get how that's an S to D zone? Does that make sense to everybody?
You can explain this S&D zone, please?
Yeah, again, it's just the idea of, let me draw a diagram because I feel like I can explain it a little bit better to you guys out. Anytime we have a push and then, you know, a push down, like this would be like bearish selling pressure, right? And then we kind of like push up, right? Anytime I see this, I'm going to look to the left here to see what caused this push down, right? This reaction. If I see there's some sort of valid supply zone on any time frame, it could be the 5, 1 minute, 15, 4 hour, whatever. And you see it in team trades and like team markups all the time, right? I think like Albert and Sam are very good at explaining this too. Usually, if I see, you know, kind of something like this, right? And I see that push down, as soon as I see this break of structure and it's like a relevant point that we're playing off of, then I'm going to look in this zone or sort of within this leg. Typically, like, here's the other thing. If I see like something like this, even this would be the last point of demand that broke that supply zone. Does that make sense? So then I would look either here or here, right? Whatever looks like cleaner to me. And then ideally, if we build liquidity again, like this, then I'm going to look to take something like that, right?
Okay.
But that being said, there are a lot of false positives, even with this model that I've just drawn out. So it's something that, you know, 100% you're going to have to test. And on top of that, like, just be careful, right? I'm very selective about like the trades that I take, even with like supply to demand zone flips. Like I'd prefer to see the whole liquidity sweep model first, right? That's ideal. And then obviously I want to pair it with session time.
Okay, thank you.
Yeah, no worries.
Hey, man.
What's up?
Don't you consider that zone as a reversal point?
As a what, sorry?
As a reversal point, I mean, we are expecting that there should be some reactions to the zone to go back down or not to just take continuation of the previous leg.
So sorry, you're talking about this 15-minute zone here? This one?
No. I mean the thing that you explained before, S&D zone. So let's say we have an OB on the left. The drawing that you draw.
Oh, the
like,
drawing, yeah. So here, let me
Yeah.
pull it back so you can.
Yeah. So
what
we
about-
have this OB on the left.
Yep.
Let's say it's 4 hour, and then we aren't expecting a bear move here, not a bull move to go continuation.
Yeah, no, this is definitely, so in this context, in this drawing, yeah, this would be a continuation. Say this is like the 15-minute even, for example, right? I mean, similar to this, right? I mean, this is literally what I drew out was this like push down. This is a drop base drop, right? We have bullish or buying pressure within an overall bearish impulsive leg, right? So that's the same thing here. And then we have liquidity that's built, which you consider this all liquidity. But basically what's happening is all of this supply is being run by the bulls, meaning the bulls take control. So essentially it's switching from bearish order flow to bullish order flow.
All right.
So anytime I see that, then I am going to look potentially, again, you have to be very careful. Like I don't want to, you know, give a broad stroke statement saying you guys should take this anytime you see it. You have to be selective about the ones you pick. Because again, there's going to be a lot of instances where you'll see this and then you won't even hit 5R. Like it's just going to whipsaw you back and forth, right? And that's even happened to me in the live market. So it's like, again, it's something you guys have to test, right? Like I'll give you like a quick example just through this drawing, and then we'll continue with the back testing session. So a lot of times what can happen is, yeah, maybe you see this, right? Where it kind of overpowers it. We have bullish, like a shift to bullish order flow because we run the area of supply, the previous area of supply, right? Even though we have this liquidity and everything, and like, yeah, this is maybe even coming off of like a 4-hour zone. I'm not trying to like call what's going to happen in the market. I'm trying to react to it, right? So if I see this, then yeah, I'm going to take this. I'm going to, you know, try to take 5R on it, right? But what can happen too is we can kind of produce something like this, right? Where, you know, if we don't set break even on the trade, or we just have like a straight 5R on it, and we're not setting break even, like you're going to take an L on this. And this happens a lot too. So it's a matter of, you know, like obviously also applying the idea of like discount and premium, right? Buying in the discount, selling in the premium type of thing. For me, like I'm okay with taking it if it's in the equilibrium of my 15-minute leg. But you know, when we like account for probabilities and the probabilistic nature of trading, like expect, yeah, you're going to take losses sometimes on stuff like this, right? So for me, and the reason why I like doing, you know, like daily ASRs, whether I take that trade or not. Like obviously I'm going to journal it if I take a particular trade, whether I win or not, right? But even when I backtest, I like to do it in hindsight because that's the best way to learn. I find if we do the type of backtesting where we're not rewinding, like there is a time and place for it, obviously, but I find, at least for me, like I get very frustrated when when it doesn't go my way, right? Because we have like time going 1,000 times the speed, we can take whatever like entries with no consequence. Like it's not real money. You're gonna either tend to be like too overly aggressive or too conservative. It can be a recipe for a pretty frustrating backtesting session. You're not going to learn as much as you would if I can do this, right? And kind of rewind and pick. The other thing is I'm not going to pick just any trade either. Like it needs to make sense to me. I'm going to break down what makes sense, right? If a trade that I see like obviously works out, but it's not like a valid setup of mine, I'm going to ignore it, right? Because I wouldn't trade in a live market either. So you try to treat it as much as you can as like a live environment. But again, in terms of learning, it's okay to hindsight test a little. I think some people are kind of like against it, or they don't know, they don't have a process for it, but this is the way that like even Blackwatch does it as well. I don't think he really does like full on back testing either. He does a lot of like hindsight stuff like this. And I mean, obviously there's a reason we do it this way. It just, I find, at least for me, I learn way more doing it this way because I can actually see what works, right? And then I can even record it. Yeah.
And what if you have a series of OBs behind which are untouched?
Yeah. Like
will you
all
wait
of these,
for
right?
Yeah, like all of this. Yeah. So
yeah, so I mean, we can mark them out and see what produces a reaction, right? And then we'll figure out what would be the ideal way to enter it, right? Yeah, I would definitely like consider this one. The thing is, we are getting kind of like high up in the leg, and look, we're now in a 4-hour bearish zone, right? So I don't know if this is going to produce a reaction. If we start seeing like a 5-minute break of structure down, then yeah, I'll look for shorts. But otherwise, like, yeah, I mean, I wouldn't really look for longs up here either. Again, just because we're so like far extended now based on this reaction here on the floor. I'll actually zoom in on this a little bit. It's probably hard for you guys to see it, right? Yeah, exactly what Raphael said. If you want to figure it out, study the intraday markup team posts. It's like, it's gold. Honestly, I even studied the other team. Like we all learn from each other, right? There's no place for like ego here. Everybody learns from each other, and like I'm happy to learn, from you guys even, right? You guys can like show me something to add to my trading, and I test it and it works, like 100% I'm gonna add it. Why wouldn't you, right? So this zone looks pretty nice on the 1 minute. Let's kind of compare it on the 5, right? You guys see how we're building this liquidity here? Yeah. So like this looks like a nice zone. Thing is, we're not in the session that I want yet. We're kind of at London lull, the kind of dead period between 10 to noon GMT or BST. But so I'm just reading your questions and stuff to you guys.
Hey man, how do you get that indicator like that shows you the times?
So this is all part of Software FX. So
Oh, okay.
I think, yeah, there's I think you guys can get like a discount code. We don't earn anything off of it, but it's just like they gave us a code for Phantom. It's probably in the resources channel if you want to check.
Oh yeah, I have SoftFX, but I don't know how to get that thing right there, the little time. Oh, sessions. Oh, okay.
Yeah. There's a lot of cool tools in here, like if you play around with it.
Yeah, I didn't even know that.
Yeah.
Hey mate, can I ask the way you trade the London kill zone? It's looking for the flow and wait for a sweep of liquidity.
Yeah, typically I'll also play it off of like what's happening in Asia. Like I'll look for liquidity in a sweep in Asia, kind of like what we had here. It doesn't have to be an actual sweep of Asia's high or low. Like I don't care if it is, but if I see some sort of like liquidity built and then like a sweep of that liquidity, I'll take that. Or not that I'll take it, but I'll take continuations off of it. It really depends on like how it plays out. I don't have a good offline Asia session indicator for this, so I just use it based on this. It's kind of an approximation. I think Brian's right. We're probably going to produce a reaction on the downside for this too. So let's see if this even works. Remember what I said before, right? You shouldn't really be looking for longs this high up either. So, but let's take some losses too, so I can show you guys what's up.
Do you factor in Frankfurt? I see a few of the boys factor in Frankfurt and London.
Absolutely. That's what London Kill Zone is, right? It's Frankfurt Open and London Open. There's a reason the volume kicks in. It's because Frankfurt Open is an hour before London.
Right.
So there's usually a really nice like risk entry that happens on most like major pairs, I'd say, for like Frankfurt Open. So if you have the appetite for that risk and you see like a nice little bit of liquidity, whatever, set up, and then, you know, sweep of that liquidity to a risk entry, like, yeah, you can take that. And there's a good chance, like, because of the volume that's in there in that particular session, like, you're gonna get like a huge push one way or the other.
Hey man, what time zone do you live in? Or like where do you live?
I'm Eastern Standard.
So do you trade like mostly London or you do like New York?
I do a mix of both. I don't trade London every day, honestly. It's pretty hard for me because it's like,
Yeah, for real.
I have to wake up at like 1 a.m., right? But I do
Yeah.
like New York. I found consistency in New York just trading like 5-minute EQs.
Yeah,
That's
or,
probably
like,
the most
patience.
consistent trading that I do. When it comes to London, it's kind of like it's all over the place.
Yeah, plus the
Robert,
network gives you those continuations.
when you mention 5-minute EQs, are you referring to liquidity plays?
Sorry, can you say that again? You're a little bit low on your mic.
Yeah, sorry. When you mentioned that you trade the New York 5-minute EQs, are you referring to liquidity plays?
Yeah, just liquidity plays, exactly. Yeah. I'll pretty much mark out any 15-minute zone and like 5-minute zone nested, and I'll just try to like pick the one that I feel like is cleanest and makes most sense with overall like higher time frame structure. So this one didn't tag us in, but that's fine. It would have hit 5R if it did. It looks like it swept liquidity, but just didn't tap into this order block. So that's fine. We'll delete this order. Let's now look for shorts potentially. We're at New York now. I mean, we've been in New York technically since 7. That's what I consider New York, but this is officially New York Open at 8 a.m. Eastern or 1 p.m. I think British Standard Time. You guys tell me. I don't know the exact time in London. I just know that's when New York Open. So look, we got another liquidity sweep here on the 5-minute. So if I start seeing a break of structure now after this, then yeah, then I'm going to start looking potentially for shorts, knowing that we're in this 4-hour bullish zone. But you have
It
to
wouldn't be
remember,
better to wait for like the 15-minute like BOS?
so you could, but the thing is, a lot of the
Mhm.
time, what happens is prices are just going to go without you. So
Yeah.
I'd rather like take a little bit more of an aggressive or like riskier entry. And honestly, within my plan, that's not even really all that risky. Like this is now
Mhm.
like, you know, or not a substructure, but like a pretty much a full-on break, right? Of structure.
Okay.
Here. I'll mark it up.
Is that
To
the
me,
5-minute right
whole-
there?
Yeah, the whole point of like the 5-minute shifting, like bearish, like with like a bigger structure, is it tells me like ideally or like potentially, because we're in a higher time frame zone, right here, the 4-hour. We start seeing a 5-minute breaker structure. It tells me that it's very likely that order flow is shifting bearish and bears are starting to come into control, right? So a couple zones we can pick from, like this is a question I get all the time from people. There's the extreme and there's the decisional, right? Oops, let me delete that. So let's see which one works out. Technically, I'd say this is a supply to demand flip zone. So let's slap a risk entry on it on the 5-minute. We don't even have to really trade this off of the 1 either, right? Because and the problem with the 1, I mean, I like it, but I know for a lot of people who are kind of more beginner at this, or maybe they don't have as much experience trading like supply and demand, is they get caught up in all the little details and supply and demand zones that you see on the 1-minute. It's not that it's noisy, it's just you have to learn how to read it, right? If you don't zoom out and like take a peek at like the 5-minute, 15-minute enough, and you're just on the 1-minute constantly, like expect to take a lot of losses. It's a skill set, right? So you guys see how this is a supply, right? Supply to demand flip zone, right? This breaks the zone. Yeah, so we can look to take that. Again, I don't know if it's going to work. Let's see.
Do you mainly put your entries on the open or EQ of that SC candle, the sponsorship candle?
Of this one? Or
Yeah, that one.
Yeah, the 5-minute, I like doing the EQ of it. Let's see if it taps us in. It's nice when I see like 1-minute and 5-minute EQ kind of line up. So you see how the 5-minute EQ is a 1-minute FC, you said? And look,
Yes.
we cover the high. I mean, the stop loss is a little big. It's like 3.8. That's fine. But let's just target, again, 5R. Let's see what happens. And if we get swept, whatever, that's fine. We can honestly, let's set a limit order on both and see what happens. I'll do the full candle on the 5 minute for this one too. If we take a couple losses, again, it's not a big deal. So 5R would be.
For your first entry, the supply failing, is it for this supply?
It's honestly clear here on the 5 minute. So again, I look at any time frame that like is giving me like a clear like indication or depiction of what it is. But yeah, on the 1 minute, again, you have to test this. Like I'm pretty loose about it. Anytime I see something like this, even if it wicks it out like that, that's fine. The fact is like it didn't close below it, number one. I think even if it did in some cases, that's fine. Don't quote me on that. Like again, test it yourself. But see how it produced a reaction and then aggressively broke down. And then same with this, like this is a doji, right? Same deal. Look, produced a reaction, broke down.
Okay, so you're looking for a body close.
What's that?
So you're looking for it to close below the supply zone, basically.
Yeah, once it reacts to it.
Yeah.
So I want to see a reaction first and then a break below.
Okay.
Again, this is all going to be explained in much like better detail with proper filters and everything in the bootcamp. I'm just giving you guys a very high level idea of it. Like I'm not even giving you guys any rules on it, right? So I think this one is probably going to not work, but let's see. I think we're going to get swept, yeah. And let's see if the extreme works. Okay, we're producing a reaction. So the other way that you can kind of like interpret this too, see how we have liquidity built at this point on the 1 minute. It's harder to see on the 5 minute for sure, but like if you're able to read it, right? There's a 5 minute high, another like sort of 5 minute high this wick, but then obviously breaks it above or breaks above it and then sweeps into this zone. This is already producing a reaction of like what 1 hour based on our setup. Let's see if this one works out well. Again, don't know what's going to happen. Doesn't matter.
Would you be breaking even, considering that there's liquidity on both sides on the 5 minute?
We probably should break even on this, but because we're just doing straight 5R and like based on the current way that I trade with my trade management, the reason I like leaving it open, just to be clear, is obviously not because I like taking losses on things that come back, right? But if they do come back and kind of retest, like say we retest this zone here, the whole point is I want to be sure that I'm staying in that trade, right? And not missing out on like potentially the opportunity that is going to come out of after the retest. Because that happens a lot. I'm sure you guys know that if you set break even, a lot of the time price will come back, tap it, like that, right? I think this one's probably going to fail, but let's see. Okay, I mean, there's our reaction, right? So I think even if we took this on the 1 minute as just like an aggressive re-entry, because look, we even have like a series of mitigations here, right? We mitigated that. Sorry, the tools aren't the best on MT4, guys. You kind of have to bear with me. I can probably draw it out if you guys want. It's a little bit better, but I think
the idea would be trading view charts within MT4, huh?
Yeah, we'll do a mix of it. We'll do trading view maybe in the future too, so we can kind of like play with better tools there. But in terms of like the whole risk management thing, I really like that you can like practice where you're getting in with like realistic spread somewhat. Like I put like 2 tick spread because that's, it doesn't vary as much. Like you can have it set to variable, but I'm setting it to what's similar to like an FTMO account, basically. I think this one's going to end up sweeping us. See all this liquidity that's building now?
When will you look for scale-ins?
Scale-ins I'll typically look for after I see the like 5 minute model sort of play out, or like the what I call like legacy model. So all that is actually, let me just see. I think we missed something here. Let's rewind for a second.
There wasn't a 15-minute BOS yet, right? When all that happened.
Mark it out. Where? Here?
Well, in that area. That's why I was asking, because like there was a lot of bullish momentum. So I was saying, like, wouldn't it be safe to wait for like the 15-minute BOS then, and then you could try,
yeah, again, like
for
it definitely you can, but you're gonna miss out on a lot of trades. I found, like I've tried that before where I'll wait for specifically for a 15-minute.
Okay.
But yeah, like you're gonna miss a lot because a lot of times it's just 5 minute. Usually you want like a clear 5-minute. Like this wasn't the clearest. We kind of, we broke like substructure in a way, or like we did break structure overall because this is like pretty rangy. But it would have been better if we closed below like this low, for example, right? And we didn't get that. That would show us that, yeah, there is really like that momentum kicking in, right? In
Or
this
just wait
case-
for a double boss in a 5-minute.
or yeah, or you could do that too. Again, it depends. I would say test it and find a bunch of scenarios that kind of fit with your style of trading. If you want multiple 5-minute bosses, that's fine. But again, you're gonna take less trades, but you also take less losses too, right?
What do you think of taking a trade on that 5-minute OB?
Yeah. So you see this? Sorry, you see this 15-minute one that I've marked out here.
Yeah.
I think this is not one that I would necessarily trade because it's so far away and it's hard for me to even see it on MT4 here. I'm gonna have to like do this just to see if there is a 5-minute nested in here. Not that it really matters anyways. It taps into a 15. We could have taken it straight off of that. You see how we have like obviously this liquidity built. We kind of had like a fake liquidity sweep in a way, right? Because it's faking us into thinking, we can take shorts here. That happens sometimes too, so you got to be aware of it. But overall, the liquidity here on this particular trade, if we were going to take it as a risk straight away, because again, we don't even get like 15-minute breaker structure either yet, right? Unless you're like counting this leg and everything, like this whole like bearish push down, you could take like a short off of this, right? But this is not like the clearest setup to me, so I'm not even gonna really like put it in. Let's just see what happens and see if we can catch a continuation off of it, right? Because again, now I'm looking for a bearish reaction to this 4-hour. Yeah, fake liquidity sweeps, they're definitely a thing. It happens, right? Let's wait for another 5-minute break here.
Yeah, this setup was pretty valid though, to be honest.
Yeah, right. So I mean, again, it's the probabilities playing out. I'd be happy to take that loss. Like this looks good to me, right? It kind of followed pretty much my entire model. We are pretty bullish too, right? So like this could even get swept. Again, I don't remember what happens. Maybe some of you guys who remember trading EU in January, like on January 4th. I think this is the Monday, like right after New Year's. Maybe you guys remember what happens.
I think I was back testing this a few days ago and we got a short here. I don't remember too well, but
You back tested this recently? Actually, yeah. See, so look, there was actually a retest here. See this? So if we're being again kind of aggressive about it, depends on what you guys consider like your structure breaks and stuff. This breaks here, right? This 5-minute candle closes below this previous like demand zone, right? This wick. It's not the clearest zone or anything, but if we look at this whole model again, right? This is the legacy model I'm talking about, not supply and demand flips. So you can combine them. When I see liquidity, build, right? We have liquidity built here, sweeps, liquidity built here, sweeps, and then mitigate something to the left. In this case, this 15-minute zone. And then we start seeing a break of structure like straight after that. Then we can start looking for continuations short or like basically take off of it, right? So this is like what I would consider overall like a risk entry in my model. Again, because I don't even trade like off of faraway order blocks like this. I just don't like doing it, or areas of supply, right? So let's rewind a bit. This is honestly another good setup. We'll just take it off the 5-minute. Because again, I want to give you guys a little bit of like variation of as to like what you can trade. You don't just have to trade the 1-minute. I feel like a lot of people are fixated on it, and like the 5-minute will play nicely too, even with these like huge stop losses. So we'll give it 6 pips, and we'll do, or actually no, we'll do the EQ of this 5-minute. So I'm just gonna eyeball it, and we'll cover the high, right? We'll get about 5 pips here, and then let's target again 5R, which is pretty much this demand zone. So that's good. Just in case we produce a reaction off of this or react off of it and continue up. I can't remember, does it even tap into that? We might have to rewind and take it again. Here, let's mark out the actual EQ and see if it taps in. So it doesn't look like it does, but Let's maybe do it this way instead. That's fine. This might be a trade where like you see it and whatever it looks nice and everything, but because like the stop loss is so big, you try to take an EQ on it and you end up missing it. Like that happens to me all the time. I'm okay with that. So let's see.
Do you
this one.
consider like the EQ of the bodies, or you put the fib on the
Oh, no,
week
I do
two
the
or
whole. Personally, I do the whole candle. But you know
Oh,
what?
okay,
Like people do all sorts of things. I see like Albert and Sam, they do 25 or 75% sometimes. Really depends.
Yeah.
There would be tagged in on that, right? And this is all during New York session too. Remember, like no. Let's see if this hits our 5R, which is all the way down here. I'm going to delete the other order that missed us. And like for those of you who aren't familiar with like the terminology I use, R just means risk to reward ratio. But like obviously plus R is a multiple of our risk. So in this case, 0.5%. So if I'm 1R, I'm up 0.5%. If I'm 10R, I'm up 5%. So right now we are up almost 10R in total. And that's including like a couple losses that we took too. So pretty good. This is where momentum starts to kick in too though, right? So we don't know if this is going to come back to it. I would definitely consider a zone like this though, if we built liquidity and come swept into it. But let's see. It's nice that we, again, like even like broke the structural point down too, right? Like this is a much better break of structure than, you know, this is to me, right? This is such a minor close below a, such a minor low. But overall, does the logic make sense to you guys? You guys like, are you guys making sense of everything that I'm kind of going over here?
Yeah.
Yeah, now I see why I would have missed the 15.
Yeah.
Just never came back.
But again, that happens all the time, right? Like I can tell you like from last week, the amount of times like I'll have an order or like a limit set at a specific like zone of supply or demand and it just doesn't come back because momentum takes over. Like it's just a thing that happens, right? It's better than taking a loss, honestly. I'd rather be like wrong in that sense that it misses me than, you know, wrong in the sense that it comes and sweeps me because I'm the liquidity, right?
But if you see like price respecting like the structure, like lower, low, lower, high, would it be like, could you catch an entry in there, or would it just be better to just not trade it at all?
Well, look where we're reacting off of though. You see on the
Yeah.
like I always try to like put this in context of what is happening on the higher time frame, right? Look, we swept liquidity. I'm basically looking for this whole like liquidity sweep model on every time frame because price is fractal, right? So if I draw it out, I'll just draw it out. This example for you guys, right? It comes in all shapes and sizes. Here's one, right, where we have trend line liquidity. This is our sweep. This one's kind of like a subtle one. It's hard to see, but you know, ideally we want to see some sort of like breaker structure, which you kind of see here. It can be like a sub break, whatever. But say this is a 4R, right? Same thing. You also have equal highs, sweep, right? Ideally a breaker structure. And then this, basically when I see like a liquidity sweep like this, right? Like we have here, and then we leave behind a supply zone or a demand zone in a bullish scenario, I'm going to consider this like a pretty like high probability zone that we're going to like produce a reaction off of, right? And then it's just a matter of trying to figure out the best entry on the lower time frame in session, right? Whether it's London kill zone, this 3-hour period, or New York kill zone, this 3-hour period, or like the 2 hours after New York kill zone, which are fine too. But the minute London closes, I personally don't like trading. Overall, I just take more losses than I should. So I cut it out. I know some people like trading like all the way up to, you know, spread hours even, but like, what's the point? Just take losses. You get diminishing returns, I think, like, especially being at the computer for that long. Cause it's literally like, you know, if you're from London, this is like, we're talking about like a 12-hour day almost here, right? So go eat with your family or whatever. Go eat dinner with them rather than trying to trade this for 12, 13 hours. But yeah, does that make sense from a higher time frame perspective why I'm not looking for longs now? Because look, right? That's good. We hit 5R on that other one. Let's see if we can catch more. Again, we're kind of getting late in the day now, and I don't really want to look for continuations this low down in the leg. Like the play has happened pretty much. We can expect like some amount of movement is going to happen per day. Like if we're talking about like an actual pip movement, it's never going to be like super crazy. It is crazy when there's news, but then, you know, obviously you don't want to trade that and get slipped and maybe like blow your account.
So that 5-minute level that you marked before for that previous entry, that's really just a flip between demand and supply, isn't it? Because the actual break
For the, sorry, for the long, right?
no, for the short, you know, that line, you've got that line there.
This one?
Yeah. So you see
Oh, this one.
because the actual break. Yeah.
Sorry, okay,
the
what,
actual
sorry,
break
which time frame are you talking about? Because I'm kind of lost. You guys are
on the
is it this
5
one?
minutes, sorry.
This one, yeah.
Yeah.
Let's see. Would this be a supply to demand? Yeah, it would be, but this one's a little subtle. This is the kind of one where it's like it honestly slips through me because look,
Yeah.
see how it closed below.
But the actual breaker structure is that point, isn't it?
This is a substructure break. Yeah.
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 Okay.
It depends how you look at it, right? Like again, like structure can be a little bit subjective. Some people might see this as like the full. For me, again, because we're in a 4-hour zone overall, I'm okay with taking a substructure break like that. But in terms of this being a supply to demand zone, yeah, I mean, it's like, I know sometimes I see it in team markups too, like the other guys posting it. For me, I like to be a little bit more rigid about my rules with this kind of thing. The whole idea and play out of this was just that it was a liquidity sweep and then like continuation, right? But yeah, I suppose you could count this, right? Because look, does that, here's our break, right? But then by the time like this breaks, you'd be looking at this zone. So then I don't think it ever comes back to that, right?
Yeah. No, I like to say it's easy in hindsight, isn't it? Some of the markups you see, you think, there's
Yeah,
just the level
like
you get in light in real time. You're thinking,
yeah. This is why like I like to be realistic about it, even when I do hindsight trading. Like I'm not gonna like slap on trades or like say that I would take something when I know I wouldn't, right? It's different for everybody though. Like it depends how aggressive of a trader you are too, right?
So at this point in the market, what would your bias be for the next day?
For the next day, I would still
Yeah.
be looking for shorts. Yeah. But like
Okay.
we're just closing London now. So usually what I do, even in back testing sessions, I'm usually sleeping during this time if I traded London, right? So I'm not gonna be awake for Asia at all. I usually have dinner at 2 in the morning. I'm just kidding.
Just a quick question.
What time would you have dinner if you were trading London?
Honestly, like probably 3 or 4, and like I'll have like an early lunch.
He's not kidding.
I'm not even kidding. Yeah, because here's the thing. Like I try to sleep. If I do trade London, I do try to sleep at like, or if I want to trade London the next day, I'll try to sleep at like 5 or 6 or 7. Obviously, this is something that's more applicable for anybody that's like New York based, like time zone or Eastern, like me. That way, at least I get like 6 hours of sleep, and then I'll sleep usually like 2 hours in between from basically from like 5 to 7 a.m. Because 7 a.m. I want to be up, and even then, like it's better to wake up a little bit earlier so that you like can actually like wake your brain up, right? But
Eastern time, man.
Rob, I got a question for you.
what's up, man?
When you say that this area here is what I mean is, are you still looking for shorts because after tapping into the bullish order block down there, it failed to break it high? So you'll be looking for shorts?
That's part of it, but the main reason, like 80% of the reason why I'm looking for shorts and short continuations, remember I'm looking for, because we're reacting off of this 4-hour, I'm going to look in this 15-minute leg for price to come pull back and like continue down, right? So either it could be off of this. It looks like this potentially is going to produce the reaction at London. We'll see, or maybe we'll get swept and this will produce it, right? So it's again, it's the whole idea of like decisional versus extreme, which is on the higher time frame, trading this overall leg, right? Ideally though, I want to sell in the premium, right? If we're in a bearish scenario, I don't really want to be selling down here, but there are certain exceptions to that rule. If London starts kicking in, and then maybe we start seeing like, say we have a drop-based drop here, we start seeing a lot of volatility, we build liquidity, then like, and this is like a 5-minute, I'd take that. because then we
And
can
you
expect
would,
that like the volatility, the huge amount of volume in the market that's kicking in is going to push price a certain direction.
would you be concerned about the liquidity right on top of that 15-minute extreme and the 4-hour?
This one here, you mind marking it out so I know which one you're talking about?
Yeah. Right here. It also coincides with the 4-hour high. There's plenty of equal highs there in the 4-hour.
Yeah, it does coincide with it, and this is where we took our original short as well, right? The one that just went over, and that was like a huge stop. That was a 5-pip stop, by the way. So
Right.
yeah, I mean that's the extreme that we could take, right? We had our liquidity sweep like on the lower time frames, right? If I zoom out here, right? Liquidity, sweep, well, sweep and then sweep. It's funny because the sweep became liquidity and then that got swept. and then we got our entry as a continuation after that.
I guess what I mean is, would you still consider taking a short in that area, even though it's the 15-minute extreme, considering that we have all
Like
that?
I would, but here's the other problem, right? Depending on how you're looking at structure, this could be a structure break, right? Like I'm pretty loose about it. It really depends. Again, like I like using the session to sort of like help me filter out whether I want to get into trade or not. I think honestly, maybe if I saw price start pushing up bullish, like there's no chance I would really want to short that, right? Because look, now we're breaking this structural point. If we look at it from this perspective, look, I broke structure here, we consolidated, we pushed up, and then look, we're gonna break these two structural highs here. Like, yeah, you could see it as a sweep too, and that could happen. Absolutely, that can happen. But do I want to risk like, my live funds on that? I don't know. Probably not. Not if we have to break 15-minute structure up just to come back to this zone and then hope for reaction, right? On the other hand, though, if we do see, because 4-hour zones, just because they get tapped into once and hold, doesn't mean that they can't like produce bearish order flow or get tapped into multiple times like that, right? So if I see that like we come tap into this, and then say on the 5-minute, whatever, we start like building liquidity, we tap into this will also mitigate something to the left, break structure, maybe we build like substructural liquidity here, then I would take that. I'd be happy to take that. So I'm waiting for a reaction to happen. I'm not trying to call stuff like this, right? Which again, we're breaking structure to get to it. I'd rather react to the reaction.
Okay, sounds good.
In terms of management of the trades, your main goal is always 5R, or you?
Yeah, I mean, that's what I like. I even did this with my old retail strategy. I would literally take like 4 or 5R, and I would do set and forget trades. I wouldn't even like manage it at all, because here's the thing, like, especially when you're new, if you start adding all these variables in, you can't really expect consistency, right?
Mm-hmm.
So yeah, that's why, like, honestly, I think if you guys are in demo and stuff, even just do like set and forget. Don't even manage it. Set 5R, like set it like to a hard TP level at whatever like level you want. Maybe I'll give you guys a link in the video description to this in the community of like an equity curve simulator you can kind of play with. Later on, I am going to be doing like a risk management like video series or like tutorials so that you guys can kind of learn about like the different like trading systems, so to speak, in terms of risk management. It has nothing to do with entries or anything, but really just like, what you can afford in terms of strike rate based on, your hard TP or like your trading system, right?
Yeah, bro, that would be dope for real.
Yeah, so we'll definitely do that.
Thank you.
Blackwatch is saying we should take along here. What do you guys think?
Let's do it.
Let's do it. Let's see if
I
he's
like it. I like it. Considering that there's kind of like a sub-break of structure there, and a lot of equals in the high.
Yeah, well, I think the reason, Blackwatch, I don't know if you want to chime in, if you want to hop on the mic for a second. No, I was just kidding about like, if this works or not. Let's see if it does. Right? There's no nothing wrong with it if it doesn't work either. Again, we're like here to like reverse engineer trades, not call what's going to happen either, right? So let's try for 5R on this one. We'll take it straight off the 15 minutes. So this is like a 7-pip stop loss. I think his idea though, Brian, tell me if you're thinking this too, right? You just want the liquidity sweep.
Yeah, pretty much. Yeah. So I mean, the way I kind of back test is I do a lot similar to Rob here, but I kind of use this quote that actually it's the writers of The Simpsons. This is how they kind of write their storylines and stuff. They say the hardest part of writing is actually just starting in general. So it's not that they need like a refined like storyline or script right off the bat. They just need to get something on paper and then they go back and refine it. So like when I'm back testing, I just hit anything that might look good and then I go back to figure out why it worked, why it didn't work. And then that's kind of how I like chip away at like that, that boulder. If you're like sculpting, for instance, right? You kind of hit it with some larger tools first and then you go back and you kind of hit it with your small chisels. So well, but that's like that's kind of how I do it. So like I'm a little bit more, take this, take that, take this, take that, just to kind of see and then go back and figure out why one didn't work and figure out, why one did. But that's just my opinion.
Yeah, it makes sense. It's pretty much the exact same thing that I do. I've done this with Aaron too. Aaron's very good at calling stuff without like doing like the reverse engineering, which is I guess a testament to how good of a trader this guy is. So shout out to you, Aaron. I know you're in here. He just I think he just marked out this like little supply to demand flip zone. So that's fine. Brian's didn't get tapped into. Again, that happens all the time. We're happy with like missing a trade because again, we didn't like lose anything out of it. But if we're looking at purely like the London move here, it looks like this was pretty much the entry, right? So this is a supply to demand flip zone. I'm going to rewind so you guys can see how you would have entered that. So now we're going to mix in a little bit of that S&D stuff that everybody else is playing with. This also builds liquidity too, which is really nice, right?
It's nice.
I think
highs on the 15 here too to target.
Yeah, to target as well. Yeah. Oh, are you saying up here?
Well, if you look to the left, yeah, it's like very clear.
Oh yeah. Oh, there's a ton of it, right?
Mm-hmm.
But even just like here, right, we can expect that this is probably going to get swept. Meaning we can pull 5R, if not, 15 or 20R out of this. So you know what? For this one, let's play a little bit with like that different type of management style. So we'll switch from the 5R stuff for a second. But you guys see how this is a supply to demand flip zone? Kind of pushing down. This is on the 5 minute too. So like that tells me it's a little bit better. We're on like a relative like higher time frame. It's not just off the 1 minute. So I feel like there's a good chance that this is going to work.
So if we were in the short from this supply and demand zone, wouldn't we expect the low to get run because it's weak, it's not broken structure, it's formed very slowly?
Sorry, which low? These lows? Yeah, well, I mean, this is all liquidity too, right?
Yeah, at some point. I mean, those aren't the weak lows though, because we're still bullish. So if anything, the highs are weak.
Right, okay.
Yeah, because we haven't broken, like if we're looking at just 15-minute structure, we're still really bullish until obviously we aren't. But for now, it's like we would have had to break this structure really for this to be considered like truly bearish. And then, so for now, because we're bullish expectation order flow, technically the highs are weak because the liquidity to the upside is to target, and then liquidity to the downside is to potentially to sweep. But we'll have to see how it kind of plays out.
Oh shit!
Right. Okay. So where would your 4-hour low be?
Hold on, I gotta rewind a little bit, guys. I accidentally way too much there. Okay, hold on. Let's pull back.
So is this your 4-hour low here?
Over here. For expectational order flow purposes, yeah, this would be my low, and then we're kind of expecting like more highs. Like, because again, this is bullish, but at the same time, like, look, we expected a reaction off of this because we swept liquidity, right? But yeah, overall, look, it's bullish, right? We can all like agree. This is a very bullish like market that we're in. I mean, we are starting to get like corrective with it too, so I'm okay with taking like counter trend 4-hour reactions too.
Cool.
Yeah, I definitely think you have the right bias there in terms of taking out equals, looking for a deeper correction or potentially a full like 4-hour pullback. Makes sense.
Yeah. Okay. So yeah, I don't know if you guys saw that. I accidentally hit the fast forward times like 10,000 there. So luckily we didn't like wipe out all of our like trade history there. But again, I'm just going to play off of this supply to demand flip zone pretty much. This one here. Because it's reacting off of this, right? Push down, broke structure up, and then look, we built liquidity. So this would have still been Asia. So let's fast forward to where I would wake up, which would be right here. So if I wake up and I see like all of this, I'll probably like analyze what happened previously. Like Blackwatch said, we're pretty bullish, broke structure up. Also, I think this move has exhausted too, right? You have like this big impulsive move down. It's not healthy for price to keep continuing like that for the next like 2 days. It can
It's also
happen, but
just major
expect
distribution.
pullbacks, right? What's that?
It's a distribution schematic, technically, if you're a Wyckoff guy. You have that liquidity sweep there, that sweep or that liquidity build sweep down, a very,
Right.
very slight break of structure somewhere within this, comes back, see this wick here, kind of tests back into it. It's like super fractal, but it's there. It's like it's accumulating, sorry.
Yeah, accumulation. I was gonna say, I thought you meant this as a distribution, this higher time.
Yeah, just this little
Because
curve.
it could be, right?
It's good for injury.
Right, this is that curve thing you always look for. The ascending scallop.
Yeah.
Not actually.
Rising dragon. Stupid.
Sorry, let me fast forward this a little bit. I gotta be careful with it. Okay, so again, look, we built liquidity. Oh, I think actually this is the one that gets swept. So hold on, let's do the lower one as well, but that's fine. We'll take a little loss there too.
Yeah, I like this lower one here. Just because it's that demand candle.
This one?
before. This on the fifth. I'm looking at the 15 really, but yeah,
Yeah.
It's just that demand candle I'm just staring at.
That's pretty much this here, right?
Yeah, only because it's within this consolidation, like this traffic. But this is the reaction. I don't know. One of these guys.
This is where like I would say supply to demand gets even confusing for me. Is you have this zone which produced a reaction broke, but it's so like you also had it with this one, right? So again, like we're looking in hindsight, right, to see what worked. This is the one that Aaron called. Maybe he remembers it. This guy has like photographic memory. But in terms of management now, let's manage it.
There's an inside bar on that 5 minute. I guess you could say that broke structure and it tapped into it.
Yeah, this one right here, right? Yep,
Yeah.
that's exactly what it tapped into, this doji inside bar, right? Because it didn't close below or like wick the high or low of the.
Props too sketchy for teaching me now.
So I think, so if Aaron were gonna manage this, Aaron, you can correct me if you're wrong. Probably, it's a hard life when you have to lose on purpose. Yeah. Oh, it's Kyle. What's up, Kyle? I just want to show everybody you can take losses. It's fine. We're not perfect, right? You don't have to have like an 80% strike rate. Make it realistic, right? This gets tapped into too for continuation. So like,
Yeah, losses don't matter. I've got like a 50% strike rate this month and I'm still doing all right.
That's a good strike rate though, right? Like anything I would say 30% or above, you're doing good.
Yeah, you just got to rub the losses off, just move on.
Yeah. So Aaron, how would you want to manage this one? Start.
I'd be out at 5R if I'm honest.
Oh, okay. Did you start doing the 5R stuff again? Yeah, I guess you did.
Yeah.
Yeah.
Looks like
We're way past 5R on this, but whatever. Let's manage it like the other way, just for the sake of it, so you guys get a little bit of variation. I know like a lot of people will look at 15-minute structure highs to sort of take partials out. So even now, you can just pull like a little bit off of it.
I'd look to take something in here.
Yeah,
It's
but I mean, we
just
just
about
kind of wait.
liquidity, so it'd be a good time to take some heavy partials because whenever you get equals, I feel like I say this all the time. Whenever you get equals, you either get deep pullback or like a full-on like reversal. So in this case, like we got some 15-minute equals that just wicked it really hard. So I'd be pretty interested in taking some heavy partials.
Maybe even ahead if we want to be like
Possibly,
overly
yeah.
aggressive.
Because you do have this liquidity to target potentially if it did want to run lower. So
Yeah,
maybe
pause it,
safe to
pause
do
it,
so.
pause it. Yeah, look, because we've changed on the 5 as well now.
Yeah.
So you could look for a hedge.
It's definitely a hedge. So I know like a lot of people are going to be confused by this because we're not really tapping into a POI, but like the whole idea behind this, I think, which is what you guys are saying, right? Is we have liquidity, the sweep, right? So we've obviously like pushed up, and then we've seen like a big shift. We've even broken 15-minute structure here, right?
Mm-hmm.
So
It looks like there's
and
a
then,
wick
yeah,
up, wick down
there
there.
is a wick.
So
Yeah, there is a wick there, meaning there's probably something on the 5-minute.
Yeah,
It's
if you
messy.
look at it, you have that demand. There's some reaction. There's something in here.
yeah,
Yeah, something here, right?
Yeah.
yeah, it's probably just like a 1 minute redistribution or something, like a little range consolidation before pushing down.
Yeah.
Still,
So let's look for a hedge. Let's see
yeah.
if we can catch one. I think I'd be good with even this one here, like or maybe even the wick, right? In the 5-minute.
Well, it's
But let's
still
try
kinda-
this.
It's still bullish though. Until this
Yeah.
It
breaks.
is, yeah.
Until this breaks, it's still bullish. So just be cautious with that.
Yeah.
Yeah, I'd
Again,
only be
this-
looking
this
to
is an
hedge
aggressive-
into one of these or even this,
Yeah, this one lower down.
and then
Yeah,
just wait
yeah.
for that.
Yeah. So again, for everybody who's watching, like this is an aggressive hedge. This is not something we would take on its own unless you're in another trade. That's what the point of a hedge is, right? To hedge your risk. So let's see.
That's what I would have taken there.
The
Unless
short.
you're in the US and you have a Wanda and it doesn't allow you to hedge. So
So you would take this short, Aaron. Why would you take this?
It was the little buy to sell before breaking the 5-minute low.
Would you also consider it a flip zone though?
Yeah, it's essentially, yeah.
Yeah. That pushes down. That's an easy 5R. I mean, you guys can see it. Let's rewind for Aaron. We'll take this one. This is our hedge. And we'll stay in our long too, because I want to see like, I think it does end up working out from when I like fast forwarded by accident. So let's hold it and we'll manage it a little bit.
I'll stay quiet after this because otherwise I'll just end up
Solid.
taking loads of trades.
Okay, for this one, Sam is going to be pissed at me for this, but 3 pip stop loss. Sam
That's
likes
fine
his-
with me. I'm happy with that.
Sam likes his 1.5 or 1 pip or half a pip stop losses, right? So let's see. Does this hit 5R? I didn't even set a TP on it. Which one is it? This one? Press through that. I can't even see this. It's like too tiny for me. 22769. 22769. Okay, so let's set a 5R TP on this one because again, it's a hedge, right? So let's be like aggressive even about how we take our profits. I'm gonna eyeball 5R honestly. If I had to guess, it's probably. Oh wait, so 3. It would be 15 pips would be right here. It's 3 times 5. That's 5R. Okay.
The
Let's see.
15-minute wick looks like it might get a nice reaction though.
Yeah, this one here.
Yeah.
Let's see. Oh, it's trying to build liquidity. Would you break even this, or do you leave your risk open?
No, I'll
No.
just take a loss personally.
I do think it'll hit it. Let's see, or get close at least. Gotten very close. Kind of building liquidity to the downside. Let's see if we sweep that now. Oh, almost. There you go. There you go. 5R. Perfect. That's a perfect hedge rate. And look, I think we're retesting this now, which again, look, liquidity, sweep, liquidity, sweep, right? So this might be another area. Let's see. I don't think it would have tagged us in if we'd done the last sell before buy, like maybe it would have. Let's leave a limit on here and see if it comes down to retest it. We'll do another huge stop, 6 pips.
Can
What
I
would
ask?
be the extreme? Oh, sorry, go ahead.
Can I ask why did you pick that entry? Not the above one. Yes.
Sorry, I'm not sure what you mean. What about this liquidity here? Like, why am I not looking for a short?
No. Before when we trade this one, the 5 hour, you picked this entry.
Short, yeah.
Yeah, the short. And not why didn't you pick the above, which the sell limit you have?
Do you mind marking it out on the chart so I can kind of see
Yeah.
what?
Sorry.
Oh, look, I think we just got swept out of two orders. Oh, that's.
I would have looked for entry at like the sweep itself, like so the extreme of this candle, just because there's probably something a little bit more fractal. I can't tell in 1 minute here, but
Here, can you see it now? Talking about here?
You picked this one, this one here. Why didn't you wait price to react in here?
To this one? Well, I set a limit here, so we'll see if it does. But I actually think I would probably pull this order now because look, now we're even getting out of session too.
The question is because I just want to understand the mindset behind this entry, because for me it's a little bit more aggressive, and I want to understand the mindset. Just that.
Yeah, so I think the reason, well, number one, this is a hedge, right? Too. So because we're coming off of this long, we're looking to just hedge the risk on the long, especially if we're leaving like our risk open, right? We're not setting break evens or whatever. So that's the reason we took this. Yeah, it's definitely more aggressive, but this is also an S to D flip zone. This is a decisional candle. This is also kind of a decisional candle, right? We have three things to pick from pretty much. We have this one, right? Based on our liquidity sweep. We have this one, but what does this really react off of? Nothing. It kind of it's a range. This one's kind of messy, but this one's not a bad one. I mean, there's a reason I put the limit on it. I think it might work. And then there's this one, which reacted off of this, right? Pushed up and then broke structure down, right? And then we retested it and swept this like minor, like 1 minute liquidity as a result of it. Obviously we consolidated and then we eventually hit our 5 hour here, right? So it is definitely a riskier trade. And I think this is all like during New York, which is a lot harder to time than like Frankfurt or London Open. Because it's kind of unpredictable when like the volatility is going to kick in, right? It can happen anywhere from 7 a.m. to I'd say like even 11 a.m. Eastern Standard Time. So there's like pretty much a 3 or 4 or 5 hour window that can all happen, right? If we're looking at the sessions too.
Yeah, and because it's quite early on in the session, and like you've had a higher time frame mitigation, well, sort of, and then an aggressive push away. For me, I'm more aggressive in those scenarios because I get in and out pretty much. So even if my idea is wrong, I just look to re-enter on the one above.
Yeah.
But in this scenario now, I personally wouldn't be looking to short it because the 5 minutes changed from back to bullish now.
We'll see if it reacts, but I don't expect this is going to hold or anything. I think we're going to push.
Thank you a lot for the explanation, and sorry about my English.
No worries. You're all good. Now Nora wants to take a 11 a.m. long. Okay, let's do it.
Oh, is it late in the day? If it is,
that's really late in the day. That's the only thing.
Yeah, I wouldn't take it.
It's half past, or like it's half an hour to London close. So would you take that?
So do you guys risk like 0.50 per like every trade? Like even if you're long?
Yep. 0.5. Because think of it this way: if you're on an FTMO account, again, it's account durability. I can afford to lose. It depends on if you like you're compounding too, right? Look, we got swept. I can afford to lose 20 trades pretty much. I think it's even more than that because remember we compound to the downside too, right? If I'm risking 1%, I think I can lose like approximately 10% or like 10 trades, right? 1% per trade.
Yeah, I get that, bro. Appreciate it.
You could even do 0.25, but then obviously like it's a lot harder to pull a lot of profit. I have to make 40R, right? 40 times my risk at 0.25 in order to make 10% in gains, which is not bad either. I mean, if you can do that in a month, consistently, like maybe you can pull 40R in a month. Honestly, you should up your risk.
You sort out a 5-minute chart, please, Rob.
Oh yeah, sorry. That's why you're marking. I was a little confused.
Yeah. I was trying to draw an arrow to make you move it. Yeah, that's it.
That's good. All right. So I'm gonna push now to the next day because again, look, we're pretty much at the end of the day.
Hey, Rob, can you look at the weekly, bro? Or do you have that loaded?
Yeah,
in?
I have the weekly open actually. So let me pull it and let's do that. I think it's this one.
Because these 4-hour equal highs are kind of making me think.
There's daily.
I'm trying to figure out what the hell's going on. There's a lot of liquidity built in the 4-hour, so I'm just curious if it's in a higher time frame.
It's this one. Sorry, hold on. I might have to open it. Daily. I thought I had a weekly chart. Let's pull one open.
'Cause, you know, it's like if you catch this is like where you want to know, like if I catch a counter trend trade or whatever it says on the higher time frame, do I hold it as long as I can, or do I still need to get in and out? Because like for me, it's like the 5-hour stuff is nice for the intraday plays, but once you come into these higher time frame areas of interest, like you should be capitalizing on some of the more swing plays if you can manage it, and then just scatter the 5-hour trades within it. So if like you can get in a top or bottom, which is not always easy, but if you manage to do so, you know, you need to know, like, can I hold this for a longer period of time, or should I cut this one short?
Right.
And so, yeah, I'm just curious, what's the weekly looking like?
Yeah, unfortunately, weekly doesn't have like that much historical data. Like I think I have 150 days in prior price action, so like a quarter roughly.
Gotcha. Okay. All right. No worries.
Yeah, it's too bad. Next time when I set it up, I'll have to like load more data because it doesn't really. It's not like resource intensive to do or anything. But yeah, I agree. It definitely pays to know where like higher time frame price action is, because then yeah, you can swing it. You can capitalize on like huge moves like the way you do, right?
Yeah.
It's not something I'm good at, honestly. You guys have seen like in my recaps and stuff, I usually take like 5 to 7R, 9R, I think 13R. Probably the best trade I've ever actually taken, like, and held like a good volume of, was like 30R. Personally, I'm not good at swinging like the way like Brian is. Also, Brian, you're good at taking like, you know, a lot of these like huge, even intraday moves that end up pulling like what 20R plus sometimes, right?
Yeah, it's small stop losses though, you know.
Yeah, it's the
But I
small
mean,
stop losses that you can attribute to that.
it's more about the liquidity build. It's like, why is it building liquidity here? What causes pullbacks? Like a 4-hour pullback, like a pretty significant 4-hour pullback, usually has some kind of like larger, like daily or weekly catalyst, like a supply zone or something.
Yeah.
So, you know, it depends on what happens here. It's obviously about to pull this liquidity, and it kind of depends on what breaks. Like it would be counter trend because we've been so bullish if we were to look for short. So we have to be aware of that as well. But it's like, do you want the 5-minute break, the 15-minute break, or like what's gonna be your kind of like your kind of guiding whatever price action to get into like a longer term short if it presents itself?
Yeah. So honestly, I would look for longs now. Here's the other way that you can kind of like approach this. Yeah, of course, this was again a sweep of liquidity, and we produced a reaction, right? Or sorry, we produced this reaction off of it, right? Again, this is counter trend. If we're looking at like the overall higher time frame like trend, we know this is, you know, really bullish on the 4-hour. But then on top of that, we've like weakened this high too, right? So I mean, again, like I'm happy to try and like take a short intraday based off of like bearish order flow. But if I see it starts like, you know, tapping it multiple times, we can also consider that this is liquidity and this is going to sweep and could push down, or that overall, like, you know, maybe we're reacting off of this, this is pushing up, and now we can look for longs off of this like S&D flip zone on the 4-hour. So the fact that we ran and like pretty much ran all of that supply tells me that, like, again, the bears, or sorry, the bulls are back in control. So
yeah, I agree. And I mean, I think the kind of key takeaway from like the discussion that we're having now for the people listening and stuff is that it's more about what you see. Trade what you see. Don't trade the bias, right? It can play either way at this point, right? Obviously, you're going to use like different time frames to kind of understand, you know, why a pullback is happening in the first place, and where the liquidity is building, and kind of why it's building, and what happens after that. And it's always about what happens after that. Like if we continue bullish structure after this, taking out the equal highs, that means those equal highs were just for targeting. and using the bullish price action to kind of continue price higher. But if we start to see like substructure breaks and structure breaks to the downside after this equal high sweep, that means it was a sweep of liquidity, and those breaks of structure indicate intention for lower prices. So it definitely could go either way. These are usually those like turning points that you have to be cautious of.
Yeah. This is definitely very challenging to trade, right? I guess the other way you can also look at it is within this 15-minute leg. Oops, using that tool. And we can wait and look for a long anywhere here. But then again, at the same time, like Brian said, we could also like blow through this completely because this could be a hard time frame sweep. Right? So even this like long here, like, yeah, this was technically, this is what I mean about like supply to demand having these like false positives, but it's a matter of like applying proper filters to it, right? If you just take every supply and demand flip, like you're going to take a lot of losses. This is a bit of a weird one. Like this is a very rangy like London Open too.
It's a counter trend thing. It's just going to keep sweeping over and over. And
Yeah.
kind of, I don't know. I feel like counter trend trading is always super choppy. Like if like it's running bullish now though, but it's like tapping into, or it's just taking out those equals. And usually whenever you take out equals, right, we expect a deep pullback or potentially full reversal. So still kind of waiting for that, because this, I guess technically though, this was that initial sweep, right? This, whatever's in this wick, that was during Asia.
Yeah, those during Asia.
You know, I do prefer full body closures on sweeps, but let's see.
Yeah. So I don't know who marked this out, but I mean, your idea was right. It's just you picked the wrong area, right? And I think if we were to investigate this on the lower time frame, we could probably find a proper entry. But well, actually, I don't even know. Like we could even just sweep and actually blow through all of this too. Let's see if it continues. Yeah, that's liquidity. That's trendline liquidity for sure. But then we also have liquidity here. It's hard to know, right? This might be an instance where if you're like just trading the legacy model on the 5-minute, you would maybe stay out for the day, or at least till like New York. Like this would maybe be an instance where I wouldn't even trade London, right? Because I'm not seeing like huge momentum, and then I'm unsure based on like you have too many conflicting perspectives on the higher time frame and like mid time frame.
Yeah.
So
yeah, that's just it.
Again, why take that risk, right?
Yeah, if it's unclear, just don't even bother.
Yeah, that one's pretty good there. So okay, let's see if we can get bearish order flow off of this, because here's one of those models, right? Yeah. Liquidity, right?
Yeah.
Sweep, push, we broke structure, we retested it, right? The extreme here. And then I'm guessing this reacted to, yeah, this reacted to a very, very like subtle, small rally-based rally on the 1 minute, right? So I'll mark it out so you guys can see it.
This is essentially a double confirmation entry as well.
Yeah. So see this wick here, right? Is this rally-based rally? Push down. What broke this structural low on the 1 minute? This did, right? So let's look to take the whole 5 minute. Let's see if we can pull 5R on that. Just cover this high again. Do 4.5 pips. It's huge, but it doesn't tap up. Building liquidity, equal highs. So let's see if it sweeps. I'm going to expect it probably does. Sweeps us in. Okay. There we go. 1R. 2R, 3R, 4R. Oh, I didn't even set it. Did I set a TP, guys? I don't think I did. Let's set a TP. What was my stop loss? 4.5 pips, right?
Yeah.
Yeah, there's another one here. So here, I want to show you guys like how crazy Aaron is with these scalings. Sometimes I don't even get it sometimes. Can somebody calculate what 4.5 times 3 or times 5, sorry? I'll just do it.
22.5.
That's 5R right there. Okay. And then let's take an Aaron scaling. How big of a stop loss you want, Aaron? 2.5?
No, I would have already scaled in. So
Oh,
the entry would have
here,
been on
here,
this.
right?
Yeah, yeah.
We'll rewind for you. It's fine.
That means you're gonna have to set your take profit again, by the
It's okay. It's okay.
way. All
Not
right.
a big deal. But yeah, this is another STD flip zone, right, guys? There is our demand that gets run, right? Break structure here, and then this is what caused it, right? This newly formed supply zone. So we'll set a sell limit. Again, I'm gonna be like pretty like wide about it. Let's give it 3 pips.
Yeah, because the way I trade quite aggressively with, I look at the 5 minute mostly and the 15. If once a 5 minute starts committing, then I use that as my gauge.
Look, we even have this liquidity here. That just got swept. That's great.
Another thing you could do too is you could always target the next supply or demand zone. Like we have these like demand zones here that you can
Yeah.
target. And you know,
Let's
like
try
if
that.
it's clear, like if there's nothing within this, you know, 5R is obviously always solid to do, but you could always maybe trail a 5R stop loss. So if it comes back against you, you take 5R, but you give the potential for more. Does that make
Yep.
sense?
That's you know, let's do that. Like I think this is even past 5R at this point, but or no, I think 5R was like somewhere around here. What, you think it's gonna pull back to this, Aaron? Probably, right?
Well, we'll see.
We'll see. But either way, let's trail it to 5R, and then like I would even look to take partials potentially at like these zones. Yeah, even now.
Well, because you have technically supply, and this would be the reaction, right? And then so you should, in theory, get something here, but it's technically still bullish. Just
Yeah,
you know, keep that in mind.
yeah. This is all a pullback on the higher time frame, right? Like if you guys got to pay attention to the context. This is why it's important to look at the higher time frame. Otherwise, you're gonna get caught into thinking like, oh look, we're really just like bearish. Let's continue to look for shorts when really like we could react bullish off of this or any one of these like zones in this leg pretty much.
Yeah, I mean, after the sweep of equals, if we get like a well, we got the 5 minute break, but
Yeah,
this isn't.
we
like
even got the
great
15
structure.
minute break, right?
If we break this, I would.
Then we can
short
look for major like yeah.
If it breaks this, because I actually have to run soon. If it breaks this, just short it for me and just hold it.
Okay.
just try one swing position in your life. Just try it.
We'll do it. I'm up for that. Yeah, I think we'll just run this for another half hour because normally I like to do like just so you guys know moving forward, we're gonna do like these 2-hour sessions. So we can account for like, you know, the questions and stuff too, and we can pull like, and we only did like 2 days of price action on this. So next time we'll run through price a little bit faster, but since it was the first session, figured you guys would have questions, and I wasn't expecting Brian and Aaron to come in here, so appreciate you guys coming to it.
Sorry if we
Oh,
hijacked anything.
Yeah, that's what I was just thinking.
All good.
I gotta go soon anyways, but
Happy you guys joined. I think we'll find a way to structure these a little bit better in the future too. So we'll do a mix of trading view, like bar replay. The other reason I like Software FX, just to be clear, is because I can actually see the movement and print of the candles as they develop. Whereas with Software FX, you click a button and it kind of just shows you like the before and after of that candle, right? Yeah, let's look for a short. So we're in New York now. Let's move back a bit. We also built liquidity here, right? So if I were like looking at the chart,
Yeah, I don't know how aggressive we want to be, but I would have entered either on this,
This one?
this,
Yeah.
and then if I was trading, this would be a seconds time frame break, and then I'd look to enter here as well.
Yeah.
But you don't have to do that. That's just what I would have done.
oh, it's fine. Let's take one of them. Let's just see what happens. I'm good with that. Always learn something new from Aaron. 5 pip stop loss. I don't know why the stop losses are so big. It's just like really volatile price action. Look, we get our sweep right into it, and then our react, and even a retest. That's great. So remember, guys, this is all based off of the 4-hour sweep 5-minute breaker structure, like up here, 15-minute break. So we're looking for continuation short. Again, if it breaks this low, like Brian said, Blackwatch said, then we'll look to maybe take a short here if we can line it up with like London the next day. And let's see if we can swing it down. So we'll play with that a little bit. But to be clear though, like if you're developing a trade plan, I would say stick to one management style so that you don't have like 4 different variables to play with. Because if you're gonna mix the management styles like that, like again, don't expect consistency. Yeah, so
That
like we just
close-
broke that. If we close below this now in the 15, then
Yeah.
Yeah.
Then I would want to look at the extreme, like, yeah, probably
Again-
probably in this area. Would
The
make
only,
more
the only
sense.
thing is we're coming into this 4 hour.
our zone, yeah.
Is there? Oh,
It's
yeah.
it's a massive 4 hour wick.
Yeah.
Yeah, but see, the thing is, like, this is just how I see it, I guess. So it's basically equal sweep. We just broke 15-minute structure. It just closed. So that would technically be my confirmation for shorts.
Mm-hmm.
It might not play out, but I think it's worth, if there's a hedge position long, you definitely take that.
Oh yeah, for sure. Yeah.
So the only thing is we're out of session now. Let's maybe ideally we would have like closed this out this short because this one's so aggressive too, right? We're like in the middle of the overall leg where we took
Yeah.
this. So let's pull
Because
back.
we'll be expecting a pullback now.
Yeah. So I'm gonna just close it like a little bit higher up, just based on the time, right? So right at London close, whatever we'll exit. I don't know what we pulled out of that. What did we pull? About 6R, right? That's pretty good. And then, yeah, let's look for more shorts now because again, we broke 15-minute structure. We can look within this previous leg for shorts, but we'll wait till London. Even honestly, up to this extreme, right? Let's see.
Mm-hmm.
Yeah, I always trade.
Because you can view this as all one leg too, right? Even though it's a drop-based drop, like, right?
Yeah, like Brian said, I'd be looking up here anyway, like just based off the 4 hour thing.
Because it would be a, I mean, again, this is Wyckoff. You don't have to trade Wyckoff, but it would be a UTED and then a test into that UTED technically because it'd be sweeping out that liquidity. Whoa.
Sorry. I was I was just skipping. So it looks like it actually happened in Asia, which is too bad. I wouldn't have traded it, but for those of you that trade Asia, then there's definitely a trade.
Blackwatch would have taken it.
I would have taken it.
Okay, so let's take it. What time is this? This is like, what happens during spread hours, I think.
If it happens during spread hours, then no, I wouldn't have taken it.
No, but what about the retest? You take that?
Like,
Oh, no, wait, does it happen? No, it doesn't happen during spread hours. Sorry, I'm wrong. This is good, right?
What's this on the wick? Because I like to be ridiculous and trade something lower than.
Yeah,
a
so
15.
let's
15's
analyze it
not
on
for me.
the 5-minute. Look, we have this liquidity here, right? And we definitely have liquidity here. I think this is like easier to spot, but then this is like potentially you get faked out by this, right? This wicks over this, right? We build more liquidity here, and then yeah, we would take this.
The only thing I would be cautious of is these equal highs here. But if we kind of understand what's happening, like we took out the liquidity, so technically these should be protected highs and liquidity for later. So I would still put an entry here, but understand that we might take this out and I might take a loss. That's kind of how I would view it.
Let's see if it does the 50%. The other way that I'm looking at this too, just like looking at the 5-minute, I see this as, obviously this is our sweep, whatever. We push, we create a drop-based drop, break structure here, right?
Mm-hmm.
So this isn't an S to D zone, but it's just
this is
basically
just like
a mitigation,
FE
right? And then I'm
model.
trying to take another mitigation.
Yeah, no, this is the last unmitigated area.
Yeah,
Yeah.
exactly.
Does that make sense to people though? In the chat.
Yeah,
Why
comment
do
in
we
the
trade
chat
from
if
that
that
area?
all makes sense to you guys.
Can I answer truthfully?
What's the stop loss on this?
I don't know. 3 pips or
All
something.
right. So
Oh wait, why don't I just
this,
measure
so
it?
this is always a nice thing, guys, to see is when it builds equals just before a potential entry. 'Cause it's
Right
just more
here?
liquidity.
That's a 3. That's a 4 pip stop. Yeah.
Okay, nice. That's good.
But yeah, see,
Alright.
I mean, you can see it even better on the 1 minute, right? The fact that I can
No.
see it on the 5 minute too, that's like pretty nice. I don't even have to go on the 1 minute to see it.
Oh yeah, right here. I was
So here's the
looking for
liquidity
looking
and
at-
there's the sweep.
Yeah.
Right? So we're just looking for this pattern over and over and over, and ideally like the breaker structure too. Right?
Yeah, like my primary entry model is like what Brandon was showing earlier is, or I was showing earlier, is like when you have these equal highs, sweep, and then a break of structure, you want that retest either
Yeah.
into the potential like flip zone or potentially the extreme itself. But these two areas right here are what I'd be looking at every time.
Exactly. I think we've already hit like 7R on that.
Swing it, man. We did because we
Yeah,
took out
that's
4-hour equals and we broke 15-minute structure. Just hold this thing.
Let him fly.
So now you want to keep looking. Like for me, my directional bias at this point would be bearish, like overall, like longer term. So I would just look for pro trend short trades. That confirmation by this 15-minute break. That's just
Yeah, right here. This
how I do
closed
it.
below this previous swing low. Like that's a pretty like major
significant,
breaker
right?
structure.
Yeah.
Hey guys, I got a question.
Sure. What's up, man?
So after that, breaker structure, which is that when you would be expecting the full reversal, not after the sub BOS that was in the 15-minute?
Like this 15-minute break right here.
Or like-
The swing leg.
Hold on, give me a second. I'll annotate it.
I think he's talking about up here, right?
Yeah, right there.
Oh, that. I mean, it could be seen as that. It plays out either way, right? Because this is the
Yeah.
origin of that break, and then this also is that. I just prefer to trade with more like structure. So like this for me is just one bullish leg.
Okay. Yeah.
This is
this.
just messy.
Yeah,
But at
because
the
I
end
would
of
have
the
thought
day-
they would reverse right here.
Where?
Right here. Like after this broke, I thought they were gonna reverse right here and then
Off of this
I mean,
and not
but I
pull
guess-
back, right?
yeah.
Well, the thing is, we did from an intraday perspective. Remember, right? Like this happened during I think New York, so we could capitalize an easy. I think we pulled like 6.
Oh, like as a continuation in here?
Mm-hmm.
Oh, okay. I see.
So like from an intraday perspective, yeah, like you did get it. But then look, if we're looking like again, the way that Blackwatch is looking at it, this is an entire leg. Price can pull back to any point in this leg, right? It can pull back here and continue, or can do this, right? It all depends on like where institutions want to fill their bags. Obviously, they want it at a better price, right? So if we start seeing liquidity build like this, and then liquidity, right before entry, which I showed you before on the 1 minute, is like really clear. See here, then
Mhm.
that to us is a really nice like indication that
When that happens, can you look for a confirmation entry in there though? Or like would the confirmation entry be like this overall like leg? You're waiting for the entry in there, like, and you put a limit.
so you can try
That
to.
would-
So you're talking about for this particular trade here? The
Yeah,
one that
right
we're
there.
in now? So you can, but the thing is, right, is either you're gonna be trying to take like a decision or whatever. This usually lines up more with like obviously like higher volatility sessions. In this case, like this is, we know this is in Asia, right?
Mhm.
So yeah, like you can, but the thing is, because look, we get our breaker structure here, which is like one thing I always look for. Mitigate something to the left, right? Sweep this liquidity. So yeah, you could look somewhere within this leg, either at the extreme or like a decisional here. Potentially you could get like a confirmation entry there, right? But not a low chance, but like there is a chance you're not going to get tagged in. Like this is one of those instances where you don't get tagged into the extreme. I think there might have been a decision over here.
This was the retest. Like, so like this is kind of like if you're looking at the schematic itself, like you have that sweep. Let's say this is the 4 hour, which we kind of got. We got that 15-minute break of structure. A lot of times because price is so fractal, what you get before the actual entries, you get the model almost playing out again.
Yeah, I
But
see
the
that.
issue is you don't
We're
get
on
that
a lower
retest. You have to take that. You have to take it from there. This is a good confirmation for like the lower time frame to see if that level might be valid. You could like also, like Rob said, is like once you get that confirmation that price reacted and then you got that break of structure, look for entry along the way. Like this, you could wait for this confirmation too. Yeah.
Oh, okay.
So
Like,
really,
I'm
like
just not sure which one would be safer. That's why.
Yeah, no, that makes
Yeah.
sense.
I mean,
I would say
this
even
is the
this,
top, so
this even like, again, from the, I'm saying this from an intraday perspective, right? This entry that we got here, this short, this is all, again, predicated on, we get our sweep and then we're getting like a retest here, right? Where we're like
Mhm.
sweeping and liquidity into it. So like, in theory, this is also a confirmation entry. And technically this, based on this whole thing playing out, is a double confirmation entry. Or just another confirmation entry. And then if you want a double confirmation or a triple confirmation entry, you would try to like whatever, take the extreme or decisional on that, right? As a further continuation. So I think that makes
Appreciate it,
sense.
guys. Appreciate it.
hey Rob, are there any like on the 5 or the 15, like in previous like bearish structure, like now that we're coming again, or bullish structure, like are there any equals or anything like that?
Oh, let's see.
Because that's typically where I look to like manage trades. Just
Yeah.
for people who are curious, like if you're looking at, if there's any equals in here, you should expect, like these guys right here, you should expect when price hits it, that you should get a pretty significant pullback. It shouldn't reverse because the direction is now this, but you should get like a pullback from these levels. And it's a really good level to either take partials or potentially look for potential scale-ins.
Yeah.
There's equals here too. So they're kind of stacking up. But
Yeah,
you should get pretty strong
there are.
reactions from those areas.
So that's a good point. I personally, like, I've made this mistake a lot where I'll think that because there are equals to target, that price is not going to like move in the opposite direction, that it's just going to keep blowing through it. So that's kind of like a good learning point, I think, from this. Like Blackwatch said, expect a sweep and then a pullback anytime you see those equal lows. So let's see if we actually get that on these. And then, like you said, in that pullback, we can look for more continuation shorts. Again, all based off of our higher time frame analysis, and the fact that we broke 15-minute structure, right? This swing low here. Look for continuation short. I think during London there probably was, but like whatever. We're in this nice like swing. Let's see if we can catch a scale.
Where would your stop loss be right now, though?
This stop loss is 4 pips.
Where would you put it though? Like, would you move it or would you just be?
We're just gonna leave it open for now. I mean, you could set it break even. It's fine.
I mean, one of the
We
things you have to
could
keep in
try it.
mind is like when you play these liquidity models, like the reason they react so violently is because of how much liquidity is built over a long period of time. Like if you think about the liquidity built on the 4-hour versus liquidity
Right
built
here.
around the entry and the breaks of structure and all this stuff, it's just like in order for like an institution to place like a large sell order, like 1 million standard lots or whatever it is, they need the equivalent like buy side order, right? So when they are building a liquidity, like resistance, equal highs, whatever it is, double tops, double bottoms, whatever, when they put that, when they kind of manufacture those levels, when stop losses go above that, those are technically buy orders, right? So when they sweep it out, it fills that larger sell order. So because the whole narrative or the whole story is built around liquidity, when price actually takes out that liquidity and you get the commitment by the breaker structure, when it taps back in, 9 out of 10 times the reaction is so violent, price doesn't come back to that level. Like it's gone. So you could move it to break even if you wanted to. You could leave it open. You could scale in. You should feel pretty confident that price should continue in this direction. It's hard to tell without the daily and the weekly timeframes where things will kind of start to kind of go back to being bullish if that's like the overall structure, which I think it is, just scaling out in the 4-hour. But it's just something to keep in mind.
Appreciate that, bro.
Mm-hmm.
So you see how we swept these lows, guys, and then we produced a pullback. Kind of tapped into this 1 minute / 5 minute doji, and this is in and around. Actually, I think this is going to get swept too, but let's see. Yeah, it looks like it's going to sweep. But that's why I've marked out all of these like zones here, right? Let's see which one it reacts off. But this is that expected like pullback that we were kind of like anticipating based on like the sweep of these lows. And then we'll probably see another pullback again when we sweep this too.
Yeah, I would think so.
Let's see. There's New York open now. I don't see my, like, not my model, but the model playing out anywhere here really yet. But like maybe if there were a drop-based drop, like ideally, like I like marking out 15-minute zones too, because I feel like they're obviously more reliable than like all of these 5-minute zones. This obviously got swept. If I saw liquidity building like very clearly above like a zone like this, then yeah, I'd slap a limit on it. But let's see. There could be like just not a clear entry on it. Then we're looking for shorts, right? Because we swept liquidity, expected this pullback. We're bearish over. We even closed bearish on the 4-hour below this previous swing low on the 4-hour. So let's see. We're gonna keep
So
holding.
because you were expecting a pullback, would you not look to hedge it into the discount of this leg?
Yeah, I mean, we definitely could hedge it.
Okay.
Yeah, there's nothing wrong with that. But again, hedging is another like form of trade management. If you're new to trading and you're like still trading in demo and stuff, like I would say maybe avoid hedging for now. It's a bit of like an advanced skill in that, at least for me, and I think for most people, like it can result in overtrading. So be very careful with it. It's kind of like it's a double-edged sword, right? Like, yeah, it's good for like mitigating like risk in a trade when you're getting like a counter trend move, but if you're gonna like take every supply and demand zone and like kind of like in hindsight say, or like have like whatever confirmation bias about it, say, oh, I'm just trying to hedge my risk, you'll end up getting whipsawed too. So just be careful.
Cool, makes sense.
The whole point of hedges is like you got to be conservative, just as you would with like your actual with trend entry. Like you could long off of this, but like who knows if it's gonna play out. I think actually we got a potential scale in here. See how this reacted off of this, right? Push.
I could definitely see that.
Yeah. It never came to this 5-minute either. But we did get a sweep of liquidity here, right? So we can expect price push down. I think even this 5-minute zone, let's see here. Okay, look, this one failed. But look, see this one here, how this is a supply demand flip zone. Have this. Reacts to that. We're getting really late in the session though, so that's kind of like a big problem for me. But let's take this and see what happens. We'll take the EQ of it. 7 pip. Oh, 5.6 pip stop loss is kind of high. But
So with that same concept, wasn't this one valid as well?
it was, but look where we are in the perspective of like discount and premium, right? If we even just look at like this leg or the range, you see where this is? This isn't the discount of a sell. You don't really want to take that. So yeah, it was kind of valid, but then like if you apply a filter, then probably keep you out of it, right? This is one of those instances like where I'm saying like, again, the false positives, there's a lot of them unless you have those filters and like you have like a good plan for them, right? Otherwise, on the 1 minute, I could tell you like there's probably like 5 S&D flip zones or more, like maybe 10 within this entire range, right? Like longs and shorts. So hedges, everything.
Rob, would you consider the sweep here on this 1 minute, or is my annotate tool? Would you consider this sweep this mitigated?
Let's see. Yeah, because it might come up to that, right? Yeah.
Do you prefer the EQ as a mitigation? I'm just asking. I'm just curious.
So sorry, you're talking about the 5 minute?
Well, just in general, do you, for something to be mitigated to, do you
okay,
qualify
so
that for EQ or?
It's a good question. For the 4 hour, no. For like lower time frame,
yeah,
like 1 minute, like I'll count the wick, or honestly like the body, it tapping into the body. Even with the 5 minute, honestly, I would say no. I don't really like care for it to hit the EQ. But on the 1 minute, it gets a little bit hairier, right? Because like things retest sometimes, right? So I think ideally the body, you want the body to get tapped on the 1 minute. But 5 minute, what do you think?
I personal preference, like EQ is nice, but it's like you said, in the 4 hour, no, I don't need the EQ tapped. It's just if there's like a 4 hour zone, price could just hit it by a hair, and then I'd be good to short it, if it runs bearish. But on the lower time frames, I think I like EQs. I don't know. I'm still kind of messing with it, to be honest. I'm kind of inconsistent.
Yeah.
In what I choose. So just curious what you're thinking.
Yeah, definitely not for the 4 hour, because I know you know, remember, like I used to like wait for 4 hour EQs and like
Yeah.
doesn't always tap into the 4 hour EQ, right?
Yeah.
I always tell people as long as it comes within like 10 to 15% of a 4 hour zone, then like I'll consider that. So I think the reason this one didn't work out, just so you guys know, is because like session time, right? Look how close we were to spread hours. We were like literally an hour to London close. So I don't think that would be like what, 10 or 11 a.m. Eastern. I wouldn't take that, but took it so we can throw some losses in here too. I think overall our strike rate is really high though, because we've obviously been like rewinding and stuff. Let's see if we can still try and call potentially where this pullback's going to stop. Might be this. Somebody mark something here. Where did you mark it? You can slap a limit on it if you want.
I think he marked it up here.
Okay, yeah, this one. Could come to either, right? We don't know. This is also like, I would say trendline liquidity to a degree, not too, right? Where are people like trailing their stops, or institutions trailing their stops? Probably at this level, this level.
Yeah.
If they were in a short, you know, from here or whatever, they're covering all the highs, right, to secure profit. Here, let's push to the next day. Let's see.
See how we just took out these equals and we get that pullback again? It's the
Yeah.
same thing every single time. Every time you get equals, you should expect a deep pullback.
And then from there, look for potentially a scaling.
Yeah, I mean,
If
technically,
we're
there's
in a
probably
nice
trade, there's probably a trade right here, just based
Yeah.
on
It looks like there is. So, okay, let's try to be realistic with it. Let's see if we can catch the continuation short now from here, or potentially we're going to get swept. And that's okay too.
Yeah.
Then we can just take like the next thing, right?
that.
See this trend line liquidity. But I know for me, I wouldn't even be like, I'd be half awake right now if I were up for London. So let's see if we can try and capture the move. See, we're kind of swept that. That's a very subtle sweep. Definitely does look like it wants to go shit. So if we just look at this as the 5 minute, this would be one of those cases where, again, it'd be better not to set like break even right away. Actually, I don't think it, okay, it would have tapped into the whole thing, right? See, so you might have got tapped into here or not, depending on like whether spread would get you in or not. But then look, this is really just like liquidity built right at the edge, and then it's sweeping it, right? So let's rewind. Let's take this as our scale in really quickly. And for this one, we'll take the whole 5 minute candle. Like so. 4 pips. And we'll manage this just as like a, without 5R. We won't do a 5R hard TP on this one. We're gonna like try to hold it. So again, liquidity built, right? Got tapped in. And look, where is this happening? Like literally 15 minutes after Frankfurt opened. So that's awesome. Awesome area to be trading. Awesome time to be trading. And there we go. Look, we've already hit 6R on that. Yeah, there's a really aggressive scale in here. If you want to count that as a, again, look, supply to demand flip. If we're looking at this last bearish before bullish push, right? Thing is, it doesn't quite tap into it. But yeah, you could basically sell off of that. I mean, as a scalper, that's pretty good. You'll hit 5R in like 4 or 5 minutes. So why are we continuing to push down? Hey, what's up, man?
Sorry, when it comes to that supply to demand, but what do you need, like a breakup structure to categorize that as a flip, or I'm not understanding that.
Sorry, I can't really make out what you're saying. Mike's a little echoey. You want to mark out on the chart or even like type it in chat?
Yeah, can you hear me a little better now?
Now I can hear you. Yeah.
Okay, that supply to demand shift that you pointed out there on the 1 minute.
Yeah, this one, the one that Walter marked out.
Yeah, exactly. When would you get into that short there? Would you wait for that break of structure before getting in?
So in this particular case, yeah, like this one's really aggressive for me. I personally wouldn't take this because ideally I'd like to see like this low break. I want to see it get run, right? So yeah, this would be the more ideal one for me. But even then, like look how far we pushed off from it now. And look, we've built all these like drop base drops. We've basically made a bunch of supply zones on the way down, right? I don't know if this one maybe reacted to something to the left. It's very possible. Yeah, I mean, it's very likely that it did. Same with this one, but I mean, yeah, Walter, I don't know. Do you want to explain like why you would enter that one? I don't even know why you would enter that, to be honest. That one's a little bit like too aggressive for me. I see that we like technically, here's the thing. I guess the way that he was looking at it or the way that he sees it is because we broke this like very minor 1 minute low, but this one here, right? So look, we reacted and then we broke and closed below this previous low, right?
Okay, yeah.
So I think that's what he was looking at, and then you would take the short off of it. So it's kind of like that. But a little bit aggressive for me. It's not enough of a strong break for me, right? I'd rather see it like fully run this rather than just like
Me too, because that second break of structure on the 1 minute would just seem to me maybe like a tapping into that OG candle.
So I'm just observing here, like, see how we're now like sweeping liquidity again. Anytime we see these impulsive moves, like expect a pullback too, right? Like we've swept all this major, like this would be higher time frame liquidity too. I think if I were to, oh, that's what this is here, right? It's a little bit more subtle on the 4 hour. I think on the 1 hour you'd be able to see it, right? Equal lows, we've swept it. We've also swept this. So we can anticipate again, because we're pushing so bearish and so impulsively, that we're going to get a pullback for a couple of reasons, because we swept liquidity and because price can't keep on continuing in one direction forever. So price gets like moves get exhausted at every point, right? Yeah, and this is a 4 hour zone. So you know what? This is where I'd probably start to look to take like partial profits on a couple of these trades. We'll start closing like, I don't know, let's close half of each of these, whatever. But we'll hold it for Blackwash to see how far it actually goes. I think, did I take partial on this one? I can't remember. All right, we'll take a little bit. Might as well pay ourselves, right? Equity
I like that idea.
What's that?
I like that idea of paying yourself.
Yeah, exactly. I mean, that's the whole idea behind the 5 hour thing, right? Especially for like whether you're a beginner trader or not, like you're locking in profits, paying yourself. The amount of times that I've been, and honestly, it's because I'm in counter trend trades a lot as like an intraday scalper and like trader. The amount of times that I've hit like 5, 7 hour, whatever, and then it comes back to take me out, either for break even or as a loss, like it just sucks, honestly. So much like left on the table, right, in terms of profits. So yeah, any of these ones that you're marking out here, Kurush, I don't know if I pronounced your name right, but these are all like, you know, super counter trend too, right? I know we're anticipating a pullback, but what I want to wait for first is within this 4 hour zone, I want to get like a clear break of 5 minute structure. So yeah, this is a substructure like break. Yeah, we close above it, but I'm gonna wait a little bit, honestly. It is very bearish, and yeah, like price is exhausted, but I also want to try and catch a falling knife either, right? Try to call where the long is gonna happen. So let's see if we make some more like major 5 minute highs, and if we like break it, and then I'm gonna look for our model, right? The whole liquidity build sweep into our demand zone, and then we can look to take that. You're kind of seeing it here, right? So we built equals and then we tap into this. Only issue now is like we're kind of running into London lull now. So that would probably keep me out of it. Whether this works or not, like I don't want to be in a market that's like consolidating a lot. It's just too stressful. I'm just hoping it works, right? Rather than like, you know, there's high probability of it moving toward my 5 RTP or whatever in a shorter period of time when we're in a more volatile area of like the session, whether it's London kill zone or New York.
Yeah, that's a nice wick that broke the structure there on the 5 minute.
Which one?
reacted a little bit and then it melted.
Yeah, so like this one's not bad. I totally agree. But you're talking about this liquidity that we built, right? And this wick.
Let me draw it.
You're talking about this one?
Yeah.
Oh, I see. For a short.
It tapped into it really quick and gave like a good maybe like 2, 3, 4 hour. And then it just melted.
Yeah, so let's see. Honestly, so I'd be looking probably at like this 5-minute zone. Like I'm just thinking like for longs potentially, right? Again, we are in London Wall. Let's see what happens first. I'm gonna pretend that I'm asleep at this time, right? Well, let's see. Yeah, I mean, this could produce a reaction too, right? Anything like you can react to anything in this like overall leg too. We don't know how far the pullback's gonna happen. Okay, it looks like it swept it. It's okay. But do you guys see why I'm interested in this zone if it lines up with New York? Look, liquidity, sweep. This sweep mitigates something to the left, right? It's clear on the 5-minute. This is again, obviously a counter trend like hedge, but at the same time, right? Like based off of the fact that we're overall like expectational over order flow, we're bearish, right? Look, we're reacting again. We're trying to like maybe take a reaction off this 4 hour. There's definitely a couple like maybe longs that you could have taken, I think, here in London. But then, I don't know, looks like a pullback. If we're looking at like effort, look at all of this. Big impulsive move down, very corrective on the way up. It's taking us like a ton of time.
Oh, looks like they're speaking right now. It's high impact news.
Oh, is there impact? Oh yeah, there you go. That's another reason you might want to. Let's just close these.
Yeah.
Probably should have been out of those anyways. Or we took like half off on those. It's fine. But yeah, see, like, gotta pay attention to these. Ideally, you should be checking for news like every day before you start trading. Be aware of like when and what is gonna happen. That's high impact news. Doesn't matter if it's CPI, of like any Fed chair speech. If Powell's talking, like expect price to get volatile.
Yeah, I always do that just because of FTMO. I trade for FTMO.
Yeah.
You don't want your account getting canceled, you know?
Yeah, and especially like anything that's obviously like restricted news, like you shouldn't be trading that. Because even if you hit TP on a restricted news event, like you're gonna blow your account, right?
That's exactly what I'm not. Yeah, that's why I'm always checking the news.
Or you can be if you're feeling kind of crazy, you can pull the stop loss off and the TP off if you guys want to do it that way.
That's pretty
it's not
crazy.
something I would do, right?
I wouldn't take my chances blowing up my FTMO account.
Yeah, no, listen, I wouldn't do it
That'd
either.
be crazy.
It's not worth it. I know somebody who did it though.
Yo,
I
show
won't
that,
name
man.
What news is like ideal to avoid though? Like this FOMC, NFP.
Anything high impact. So if you guys go to, I like using Forex Factory. Doesn't matter what
Yeah.
site you use, but you can filter by medium and low and high. So I'll just filter the high impact and like I'll do it for whatever currencies that I'm trading actively, whatever's in my pairs, right? In my case, it's $0. But even honestly, I'll look at any major high impact news. Doesn't matter what currency it is, because again, they all like kind of like correlate with each other. If you guys know how the Forex market works, they're all like interconnected, right? There's a great video and resources on that. It's like, I would say like a primer that kind of explains how every pair is connected, because they're all connected through supply and demand, right? So if one currency like shrinks in supply, that's going to affect like as a result of that, it's going to affect pretty much every pair's supply or demand too, right? They're all interconnected in that sense. It's kind of like triangular. If that makes sense.
If you look at the news, everybody's speaking there. Biden speaking, Powell speaking.
Yeah. Oh yeah, for this, yeah. This was
Some of them can be good volume though.
I mean, it's just manipulation of price, right? It's so funny because in hindsight, every time you can see where they built the liquidity and like where they're basically taking everybody out, right? Who is foolish enough to like place an order during news. And then, I mean, like, look, this is a huge move. They could have capitalized on that. It's like a 50 pip move. And like, what is that? 7 pip. Sorry, did I say 50 pip? This is a 5 pip move. Anyways, let's do one more trade here. I know Sam's in here talking smack. So like, Sam, can you call a trade?
Yo, what's happening? I said short it at the top, man.
Oh, short this one?
No, I said, yeah, like rewind it. Yeah, short that
Okay,
one.
we'll rewind it. You did say it. You did call it, to be
Yeah.
fair. We got it on tape.
Yeah.
Where did you want to short exactly?
Short the wick, mate. Short the EQ of the wick.
This way.
The wick at the top.
On the 1 minute?
Yeah.
Okay, let's do it.
Just
Sam,
like that liquidity. Yeah.
I actually called that one from your idea, from what I'm learning from.
Oh, nice, man.
That was the candle, the wick that broke structure on the 15-minute.
What, which, from where?
On the 15-minute candle,
Yeah.
that same candle that we're putting the order on, it broke structure on that leg down.
Oh yeah, this
Damn,
one.
how would y'all
Yeah,
see
yeah,
that?
yeah,
What the?
Yeah.
Yeah,
I saw it
see
a
that.
while back.
Yeah, that doji
15
suit
wick.
thing, man.
It looks like it got mitigated though.
The EQ didn't get mitigated, the body didn't get mitigated, so I'd still class it as valid personally.
Damn. The
And it just ran all of that liquidity, like 4 hour looks like it's ready to dump.
that's crazy.
This is where Sam is a wizard when it comes to like this
I would
stuff.
not.
Because right, like we thought this was mitigated, but like he wasn't, to be fair. Right. Again, for the 4 hour, I don't care if it hits the EQ or not. 10 to
Yeah.
15% or more. I mean, it could mitigate the whole thing. It could even wick it a little bit as long as it doesn't close on the 4 hour.
Yeah.
Then I can expect the reaction. But yeah, 15-minute like makes sense. 1 minute, you can take the EQs of it if you're like crazy, or if you're like Sam, you know, the wick EQ. I
Yeah.
mean, look, it's working really well. Look, what is this, 20 hour already?
Yeah, that'll
Yeah.
make that'll run another. We can't annotate, can we? That'll take out that load. to the
No,
left.
we can annotate.
Oh, we can annotate.
Yeah, honestly, you guys, I just want to say, like, everybody has been very respectful in terms of your annotation, so I appreciate that. So thanks for being.
Why are we not looking to long it here?
Because 4 hour just looks like it's melty, mate. Like there's
'Cause
two massive
it's
signs of
Yeah,
weakness.
it's
there.
pretty,
It's
it's
like
pretty weak. Right?
breaking structure. Just run all of those equal highs. This low looks really, really weak. Like the way it's formed is awful.
Okay.
So I would expect all of that to be taken out. I would expect all of this to be taken out.
On
Did
the
you remember
4
how we
hour,
took shorts
Sorry.
here too? Right? It's all
Yeah.
based off of that. And then I know obviously we got a reaction off of the 4 hour. That was this, right? So we could have looked for intraday longs. There is a 5 hour in here for sure, right?
Yeah, there's definitely some longs in that move up. It looks
Yeah.
like here looks like it reacted or something nice.
Let's see how we close below this previous low too. Expectationally, we expect this is gonna do this kind of thing, right?
There's also extra confluence in the 4 hour short leg. It goes up to the 50% mark, more or less, to mitigate that. And then
Yeah.
heading down.
This one?
Oh, that's a pullback, isn't it?
So what if we would have been looking for it to return to the top? Like that's like not likely to happen.
I would guess not. That to me, the way that whole like you see how this we've had like right, we had this push up, then we had this huge push down, right? Then we had another bearish engulfing here, then we had this whole leg down, then we had these two huge bearish candles here and here.
Mhm.
Right, that to me looks like there's a lot of selling pressure in the market.
Okay. Okay.
It's right. It's pulling back a bit now, but it's failing to break the highs again. So I
Yeah.
would guess that's coming for this low now. Because this,
I would-
like, if this was going to work, the long from here, this should have taken out this high without having this pullback and then this failing to break the high.
Right.
Like, if this was going to work, this impulse would have broken the high. I think. You know, you can never be certain, but
Yeah, I see that.
Sam, do you want to hold this as a swing to the next day then?
Can you
Yeah.
full margin short this for me, please?
Right now?
Yes, like literally right now. Do it.
what short it?
Yeah.
Yeah, fully.
Veil scaling is weak lows, man.
Yeah,
There's a,
it's failing to break the highs. It makes complete sense, man.
Okay. I'm gonna do it. Oh, I was not enough
because you
mark.
get you look. You got the sweep of liquidity, right?
Yeah.
And then you got your break of structure, your substructure break, and it's retesting back in.
Yeah,
Right.
yeah, sure.
Right. So right
I
here,
wish,
market.
I wish you didn't close my 4 hour short from him too, though.
Yeah, that's going to be a monster.
Yeah, you can just hit it.
Yeah, I did it. Okay, so we're market. Let's see.
Well, wait. The stop. Where's your stop loss? It's too tight.
Here.
Oh, you're crazy. It's gonna
I'll
sweep
be
this.
alright, I'll be
It's
alright,
building
I'll be
equals.
No,
Alright.
no.
No, it's gonna sweep. I'm telling you.
That's
it's
not.
gonna
It's
sweep.
not. It's not. Watch. It'll take the line.
I'm telling
You're
you, it's
fine,
gonna
you're
sweep
fine.
this.
Everybody place your bets.
I think you're fine, Brad. Be confident.
I think you're good too.
I think you're fine. I think you're fine. If it breaks that low, yeah, you're all good, mate. It won't come back now.
It looked like it sweeped it with that little wick right there already.
Yeah, that actually, to be fair, that little wick did take out the highest there.
Oh yeah, you're right.
Mhm.
I can't see it because the line's there. All right, we're good. We're good.
Dang, that's crazy.
We should do a little side bets thing, guys.
I need to really zoom in on that detail because I wouldn't have seen that 15-minute doji.
It
Oh,
keeps
this.
trying to break that.
Yep,
that
I would not have seen that.
Yeah, the devil's in the detail, mate.
All right, so I'm just gonna fast forward this a little bit. Let's see. We'll go at least to Asia the next day. Hopefully we don't get swept. Please don't sweep.
No, it won't. It won't.
Got too much risk on the table here.
Well, we're getting
Like,
both
to be
breaking.
clear, guy, like I want to give a disclaimer. Like, please don't full margin on a trade. Like, you're just doing it for- I mean, that's pretty good.
I guess
Right,
this is
that's-
why it's
that's
better not to
15.
try to pick a reversal, right? Because of all this happening.
Yeah, well, now you just don't want to be getting in the way of this falling off, mate. Like, this is collapsing now. Wait, like, honestly, the best way now is to just wait for the pullbacks, like somewhere into potentially this 4 hour here. That looks pretty good, or something a little bit higher up, maybe on the 15-minute and here.
Yeah.
This.
Yeah, the wick, right?
Maybe, or something in here. Yeah, something. There'll be something on like the 10-minute in that wick.
Or even the 5-minute, right? I think this is something that people need to pay more attention to. When you see wicks, I mean, this is really a pullback, right?
You always, yeah.
It doesn't close bullish, but
that's
like there's
this.
something here.
Yeah,
Just investigate
like
on
these
the lower
wicks
time.
tell a story. All of this is like price rejecting stuff and interacting with each other, and that's what you want to see, right?
Whenever you
Tell
get
me
like
where
this
you
kind of,
wanna
like
hit
reaction right
TP.
here, there's usually like a lower time frame, like supply or demand zone.
Yeah.
That's where I would have been confused because the 15-minute price broke structure. So I would have thought like price is
Brandon,
gonna
get
return
ready
to
to
the
short this, mate.
Here, right?
Yeah. Yeah, from
Yeah,
It wouldn't be
15
better to short right here?
structure.
Or
I would have potentially. What's this? This is 5-minute. What's
oh, is this the 5-minute?
yeah.
Yeah, this is the
Well,
5-minute
yeah,
on the left. Yeah.
This is 5 minutes. So again, you see how these wicks form here, right? All these wicks is this 5-minute price action, right? So
Okay.
this is significant. This basically, I would have shorted that 5-minute candle potentially.
Yeah, so let's try it. Let's just do market on this.
But would
Are
you
you
be
good
in
with
and out
this?
of that or?
No, I'd look that. I'd want that to take the low personally.
Okay.
Is that
Oh, the stop loss is too big for you though, Sam. 4.5?
That was just fine. It's fine. It's all good.
I don't know, man.
Come back. No, shit, it's gonna melt, mate.
Yeah, I had
We're close to flipping the account, guys. We're close to flipping the account.
This is gonna absolutely melt.
It's because we swept
Oh,
this
is it-
liquidity, right?
Yeah.
But let's see. This might also be liquidity. We might still tap
No,
into
no,
this.
no. This is
Maybe not. Never
Should
mind.
have shorted something in here, but we can't see the seconds. That's annoying.
Yeah.
But this is just. I reckon this will dump now. If it breaks this low,
Damn, how'd you know there was something in here? I wouldn't have even seen that.
because I spend a lot of time looking at charts.
Like,
It's because again, it's that whole idea of those wicks, right? Do you see the wicks? I'll zoom into it a little bit. Anytime you see like wickage like that between two candles, if you investigate on like the seconds time frame, I don't personally trade the seconds time frame, but Sam
yeah, I
can.
don't even have the second cipher.
Otherwise, I would trade personally, so I just it's not my thing.
Nothing really pulls back enough, huh?
Yeah, it's really bearish.
Yeah, it's
You see how every time we sweep like structural liquidity too, we're
Just
producing a pullback. That's where you can look for continuation
yeah,
shorts, right?
continuations. Like we
Oh,
could have
okay.
tried to short. I would have tried to short this, but I don't think. Oh, I don't-
Why don't you guys short at that lower order block there?
yeah, I would have tried to short that, but I don't think I would have got filled.
Yeah.
Or this, yeah, this is, yeah, makes sense. It doesn't really. can't. Yeah, the problem is on softball, you can't really see what it's reacting to the left. I half expect it to pull back a little bit
Have a
higher.
pin. So where do we want to cut it? We'll just keep holding it.
Yeah, just keep holding it, mate. Wait till it takes that low.
This one?
Yeah.
The
Yeah.
wick, right?
Yeah.
All right. I'm not even looking for
Cancel
entries.
that order. Right?
Oh, this would have been another one, I think. Right, we're right at New York. See this wick?
Yeah. Yeah.
Okay, hold on. I don't think we have enough margin to even take any more trades, but let's try.
Oh, really?
Because that's pretty nice. Do you see the model again, guys? Like, it's clear on the 5 minute that we don't have like a supply zone to play off of, but this wick, again, if you investigate it, look, here it is, right? On the one.
Oh, damn.
Yeah, so I think
Zoom back a little bit so you can see it better. Yeah. And this, I think, hold on. This might be a supply to demand flip zone too. Let's see.
It looks
Like
like
if I were to draw a line off of here, let's investigate to see what does this react to. Oh, look, demand zone.
Yeah,
There
yeah,
you go.
exactly.
And then look, breaks it. So this is a very like good quality zone, and it's right at New York Open. It happens. So
yeah,
I'm gonna pull some on my like full margin short so we can maybe.
Hey, I have a question. Sorry.
What's up?
Why don't you guys annotate at here? I mean, trade from here. That point, rather than this one.
Because this was liquidity. Though there was liquidity here, I see like where the confusion is. I think this might have been out of session, but I don't know for sure.
So if it was, it would have been valid.
Kinda not.
I don't love. Yeah.
Yeah, I don't like it either. Yeah, don't diddle in the middle, right? Okay, look here. This is what I want you to pay attention to. Tell me where the premium and discount is if I mark out this entire leg. This is a 15-minute leg, right? By the way.
Yep.
See this 15-minute leg? Where are we? Right, we're in the discount of a short. We don't want to be doing that. At least this is at the equilibrium, right? Or higher. So we would look anywhere here, ideally. That's a really good filter to apply because again, we don't know when price is exhausted. We don't know when it's going to pull back, right? We're not trying to anticipate. We're just trying to play like reactions that are higher probability, right?
Okay.
So that's what would keep us out of that one. Yeah.
All right. Yeah. Thank you.
Yeah. No worries. Okay. So actually, sorry guys, I'm just gonna quickly. Again, this will be like probably the last trade because we're running over like 2 hours now here. Just fine. I don't mind like running it a little bit longer and just my throat kind of hurts. Let's close big chunk of this so we have some margin to play with here. It's just too ridiculous. And we can take this with go back to 0.5%. We'll be a little bit more realistic about pull these limits and set our limit at our flip zone. Demand to supply, right? Remember we investigated this with like the turquoise line and it tapped into a demand zone to the left, right? Popped up, broke structure. We built liquidity here, right? Even though that liquidity was very close to it, I don't think we ever actually tapped into the 1 minute until here.
You're also aligned with order flow on all time frames.
Yeah, we're bearish pretty much on all the time frames, right? So sorry, probably should have given it more buffer. So do that. This is what, 3 pips? Okay, we'll give it 3.5, 3.6. Right, to account for spread. I think it just comes to like literally the tick.
Yeah.
Right, so that's a really nice entry, right? Liquidity, sweep. Again, here on the 5 minute doesn't show, but on the 1 minute, it is a area of supply, right? Because we have bullish pressure and a bearish leg. Could easily get faked out by this one too, but then look, if we add the confluence of supply to demand zones, like the flips, like this tells us that this is a better one, right? Because we reacted to something to the left here. And it's clear as a wick on the 5 minute. Let me put this like that. That's good. We're in this trade. This is already running like crazy. So again, we're gonna wait based on what Sam said, for at least these lows to get run, and then we can look to take like.
there. It's got to take that out, right? You would guess it might.
Might or might not. Let's see.
Yeah, it is a 4-hour wick, but
There's another supply to demand zone right here.
yeah.
You see it? You guys want to take it? Let's take it. Let's move back because I totally missed that. Just for the sake of explaining it again, look, demand zone, right? Push up, bullish push, and a bearish leg, right? And this is on the 5 minutes, so it's pretty reliable. And okay, here's the other thing. Like, I guess I forgot to mention too, right? I'm always looking for these continuations. Anytime we have that sweep, and then we see potential like decisional zones that we can play off of. I mean, even this one is one too, right? And look, it gets tapped here, right? And then we have pretty much building a series of supply to demand flips, right? And we can look to take that. Now this one gets mitigated and tested, but technically you can, right? If we look on
What
the
do you think about
here, there's the
putting a
code.
short? What do you think about putting a short on the inside bar on the 5 minute, the broke structure? On the wick.
Which, oh, this one here?
Yeah.
Is that an inside bar?
Yeah, technically it is. Doesn't violate the low.
Yeah. Okay, let's do it.
Because that inside bar mitigates that bearish candle. However, the wick, it's unmitigated.
This wick here to the left? Or you're talking about this wick?
Yeah, on that same.
I see what you're saying. Yeah. Yeah, I don't think it's a bad idea to look at it that way. The other way I think you could look at it, Sam, tell me if I'm wrong on this. You know better than me. This wick we can also view as a demand zone, right?
Yeah,
On
I
the lower
guess
time frame.
that's something in here, right? That's like this.
Yeah.
So
Well, here,
really-
let's actually investigate on the limit really quickly. That's this.
Yeah,
There you
that
go.
comes into here, pushes.
So let's see.
Doji, really.
And look, we built liquidity,
Yeah.
sweep into it.
Yeah, I would have guessed the doji, but there you go.
Yeah. this
Alright.
one. Oh, yeah. Okay. This is that thing that I think we saw on was it Thursday or Friday last week? This is a nested one actually. Look, we have demand here, and this is all inside of a supply to demand flip on the 5 minute, right? And then look,
Yeah, it's all fractal, isn't it? Like,
it's very fact. I think when you see this is like an A++ setup because look,
Yeah,
it taps right into this doji.
Yeah.
So in theory, if you wanted to be very like specific about it, this is an even better way to enter it. Look, if we enter off of this, I'll give it a little bit of buffer because I don't know if it's going to tag us in necessarily. And even if we cover this high, or like just the doji's high, right? 2.5 pip. Let's see if we have enough margin to.
what do you
Hold on.
think?
1 sec. Let me take some partials on the other ones because I just want to see what this runs. It's 50 on this.
How much R have you made so far?
Too much.
Too
Too
much.
much. 200 R so far.
How many days have you gone through?
Like 8-9 days.
Yeah, something like that. Okay, there we go. We're in it. You guys see what I'm talking about? This nested supply to demand zone flip. Like that's pretty good. I just learned something new myself last week on Thursday. And then there you go. We saw one. Hopefully it holds. At the very least, if you had taken 5R on this, like you'd be
Yeah,
good.
these ones lower down the leg like this, you want to be a bit more aggressive with management, like because that
look,
hasn't
like-
pulled back in a while. Let it play.
Like we were saying before, right? If we're looking at this entire like 5 or 15 minute leg, we're now trying to sell it in the discount,
Yeah.
which is not good. So you should be like pretty aggressive about your management on these, right?
You would guess what
You
it's
mean you guys?
or is this?
You mean we back tested 8 days and only flipped our account? That sucks.
Well, I want to be realistic about it. We did also hindsight trade out that too, right? We didn't take
Okay,
that.
okay.
I think even if you just took 5R for all of these, like we'll do a quick calculation at the end so you guys get an idea, but oh look, this one's actually playing out too. Okay.
I mean, it's good. Like it's a good trade, mate. It's just that area, isn't it? I
This
would
is
guess it's
risky.
going to come
Hold
into
this.
this. You see this little thing here and below the gap there.
Yeah. That's where I would look to take profit probably. As soon as you run these lows, like I want to get out.
Yeah.
But that was a cool setup, right? Like the nested one. I think that's an interesting one to trade. Again, if we took just 5R trades, just so you guys get an idea, like, and we didn't do like all this account flip stuff or like full margin on that one trade that Brian wanted. It's funny to do it, right? But like we would never do it in a live account, right? So again, I like to be like realistic about it. We'll do a calculation after. I think even our strike rate's like over 50%, which is crazy. Oh, look at that. We keep retesting it, building liquidity, retesting, and then pushing, right? I think we're building too much liquidity now. This is probably gonna get swept. Let's
There's a lot of liquidity on the 4 hour, maybe expecting a pullback now.
Yeah. Let's see if we run the lows first though. I'll leave it open, or if we take the loss, we take the loss. -1,
Yeah.
right? Not a big deal. We built a lot of liquidity here though. Let's see. Yeah, there you go. Swept it. But again, the nested supply to demand zone, 5R, you would have taken no problem. Uh-oh, Sam, your thing's gonna get taken out too. We never even swept the low yet, I think. Oh, not yet. Or we're just retesting it. Let's see.
Sometimes do you just close the trade because you see a lot of liquidity, or you leave it or stop loss, or to take profits? Yeah.
Well, the way that I manage trades now is I just do 5R, hard TP. It's just simpler to manage it that way, right? Yeah, Brian thinks it's gonna pull back and then sweep. I could totally see that. Yeah. Anyway, so I wanted to quickly show you guys. Let's kind of wrap this up now because we're running out of time. If we were to just do this as 5R type trade, let's just do a calculation here really quick. I'll try to make it kind of simple. Number one, if we want to calculate our strike rate, not accounting for break evens. I don't think we took break evens anyways. Obviously, all you would do is look at our profit trades versus total number of closed trades. So it would be, I think, 15 divided by 26. So we have a 57% strike rate. Again, it's in hindsight, so it's a little bit like, unrealistic in that sense. But that's why I wanted to add in losses. I didn't really like rewind on any losses, as you guys saw, right? If we took just 5R on all of our profit trades, it would be 5 times 15. We would have made 75R, right? 75R minus 11, right? Our loss trades. It's -1R for every loss. We would have done 64R just taking 5R trades, right? In a matter of what? 2 weeks. And then if we multiply that by 0.5, 64 times 0.5, right? That's our risk. We would have made 32%. That's pretty good.
Yeah, it's amazing.
Yeah. So just shows you guys like kind of the possibilities. I wanted to do a more realistic, again, like more realistic calculation, because I don't want you guys to think that like, this 100R is realistic at all. We hit a 2%, like almost a full margin, like short on this, right? Over here. So don't think that's a realistic thing. Maybe something in the future, if you're an advanced trader, you want to play with like variable risk or risk scaling type of trade management, you can do that, but not for the new guys here. Don't do that. Please don't blow your accounts. But yeah, I hope you guys learned something. I'll upload this to the community, obviously, and we'll be doing one at the end of the month, so in a couple weeks from now. Thanks for coming, everybody.
Thank you, Rob.
Really appreciate it.
Hey, appreciate the session, bro. Appreciate it, man.
Thank you. Thank you.
And thanks to the other coaches who came on too, and
That was sick, brother. Well done, man. Really, really good, man.
Yeah, thank all y'all guys.
Yeah. Love you.
Later, guys. Take it easy.